gold stocks traded at crazy premiums, crazy valuations. We actually did a calculation once that if you bought a bunch of gold and buried it in the ground and recapitalized it as a gold mine, that gold mine would be worth more than the gold you buried in the ground. Right now, there's no valuation difference between a gold mine and a copper mine. This is the problem and the blessing of the gold and mining industry is everything's really important in this industry. My dad used to say, I choose to be an optimist because I've never met a rich pessimist. But he lived before all these great shorters had made money in the marketplace. The right decision is often, if you bought it for a reason and that reason's not true, you probably should sell it.
All right, John Goodman, not the actor, by the way, but potentially better than the actor. At least talking about gold. As John's actually the, as far as I understand, the founder of Dundee Precious Metals, one of the larger gold mining companies out there. But that's not necessarily what we're talking about today, or maybe a little bit, because John, I actually want to. Well, that's actually where I might be a good point to kick it off, because Dundee is a $2 billion market cap company right now that makes money by selling gold and a bunch of other stuff as well, but mostly gold. And then the value of the underlying asset has gone up by almost 20%. It's around an all-time high right now. Well, down a little bit these days, but it's around an all-time high still. Yet the stock price of the company is basically flat on the year. Just up a little bit over that 52-week period, I think like 5% or something like that. And you'd say, okay, that's not really great, but what's really not great is Newmont being down over 22%, Barrick's down 13%, B2 is down 37%, and they're not the only ones, right? You get the point. And I've been asking this question to pretty much everyone who's come on recently, but so what's your take on this? Why are the producers lagging the move in the underlying asset?
Well, I think we're getting to a point in time where the producing companies have to prove themselves as companies. And how do I say this in the best of terms? The reality of it is, when I first got into the business in the 1980s, gold stocks traded at crazy premiums, crazy valuations. We actually did a calculation once that if you bought a bunch of gold and buried it in the ground and recapitalized it as a gold mine, that gold mine would be worth more than the gold you buried in the ground. And a good friend of mine once wrote an article, Rick Cohn, who's I've worked with for many years, wrote that up as a research piece once. But it was true. And the reason gold stocks traded at premium is because it was very hard to buy gold. And the biggest gold producers in the world were in South Africa, and no one wanted to invest in South Africa at the time because of its political instability and the apartheid regime. And so what happened was people got their gold exposure through North American gold stocks. So all these stocks got spoiled. And as spoiled companies go over time, they became, they kind of thought, because we're a proxy for gold, we can do whatever we want. And I think what the market's saying now is you got to prove yourselves as businesses. We can buy gold. If I want a levered piece of gold, I can buy gold, borrow money and buy gold. There's many different ways of buying gold, whether you buy it through an ETF, you buy physical metal, you buy coins. And I think now's the calling card. You've seen a lot of companies really change their tune, and they now focus on how they're going to return capital to dividends, and asset allocation has become a very important thing. And as that progresses, many of these companies are going to get it right, and you're going to see a relink between the gold stocks and the gold price. But what's happened is, because gold stocks, and I'm not suggesting that any of these companies are bad companies. I think the sins that we're talking about were committed a while ago. But investors have, in a lot of sense, tuned them out. So a lot of investors saying, if I want gold, I'm not going to buy a gold stock because last time I did that, it didn't work for me. I'm just going to buy physical metal. And so the gold stocks have been left out of the gold rally. And for us, that's a wonderful thing, because clearly it's an opportunity, because as the companies get it right, there's a lot of money to be made, as they not only will start acting like gold stocks again, they'll start as a catch-up.
Hmm. And I think you say as the companies get it right, which is I appreciate your confidence, but it's more a question of if the companies get it right, I suppose here. Or do you think it's when? I mean, what do you think fixes this? What do you think can help them prove themselves here?
They don't get it right, there's boards of directors that are gonna fire managements and bring on managements that do get it right. I mean, that's what has to happen,
Hmm.
or shareholders have to vote out boards of directors. And the reality of it is, the companies will eventually get it right. It's a question is how long is that gonna take? And I don't have answers.
Hmm.
We
What does that
focus.
mean specifically? Like what fixes the gold miners from what gold miners are really right now? It's all the comments that I seen under these videos too is, don't touch the miners or just trade the miners. Nobody, like most people say these are toxic long-term investments. And you bring in dilution and inflation into the mix, and that's definitely true. So what do you think fixes that?
Well, if you look at the GDX and the GDXJ, and I go back to 2009, because that's when the GDXJ was founded. There's no magical, mystical number to that, but they founded the GDXJ in 2009. During that period, there's been a complete disconnect between the stocks and the metal. In 2009, the price of gold was a fraction of where it is today, and the stocks were much higher than they were today. So the gold price has gone up dramatically and the gold stocks have gone down. And that's over 15 years of underperformance. That's why I say you look at the companies now, a lot of them are making good decisions. And that's why I want to make sure we don't blame the present management teams necessarily for how we got here. But I think they need to spend a lot more time. There needs to be a better understanding between investment groups and management teams. And the other thing we need to fix in this industry is need to make ourselves more predictable as an industry. We need to, I guess the best way of saying it, there's too many times where people have bought a good story thinking they're getting an investment in a either a gold stock or any type of mining venture, and they find out that all of the reports that they relied on for the resources and the reserves and the PEAs and all of that stuff weren't true. And so we need to do a better job technically across the board, because we need investors to know that if they buy something that has a um, you know, 10 million tons of 2 gram material and they're going to build a mine, that there really are 10 million tons of 2 gram material that can be mined profitably at that project. And that's a big part of what we do, to be blunt. um, because our experience is that you can't trust a lot of the publicly available information.
Hmm.
That's not that's not good. If we want generalist investors to come back to our industry, we're going to need to give them information that they can work with as generalist investors. They don't need to actually have to come and find someone who's either connected with good relationships out there that they can trust, or connected with good technical abilities to look at it.
Hmm. I feel like I'm going to make a very general statement that's potentially false, but I feel like it might be good, so I'll make it anyways. But it's since I've been in the space, it feels like we've really done a lot of effort as a sector to figure out how to make investors think that, let's say, point 0.3 or whatever, marginal grade deposits can be mined versus making an effort to make those deposits actually mineable from a technological advanced standpoint. And that's kind of the wrong thing that we're investing capital and attention to. But that's where the money is. Over promising and under delivering basically has been rewarding a lot of management teams out there. Um,
You're bang on. The reality of it is, there's many ways of looking at an existing project. One of the things we've learned, because what we do is very different, because we know you can't trust the data. We've built our own team in-house at Dundee Corporation. We've built our own in-house team of experts. And so when we look at a junior company, we sign a confidentiality agreement, and we spend a lot of time looking at their data, looking at their deposits, looking at how they've massaged the data to get their results. And I don't want to say massaging data is always bad, because you always have to in some way, shape, or form massage the data. But there's a lot of differences between the different techniques. And a lot of people simply use the techniques that are going to produce the best looking results for them, rather than using the techniques that are going to produce the most realistic results.
Hmm.
And that's where and there's so many times that we walk away from projects just because they're not as advertised.
We basically think the only way for Canadian mining to be saved is for them to save themselves.
Well, I mean, there's real competition for capital, and people want to put their best foot forward, and they want to raise money. And I think we need to change the way the data is managed. We need to change the way engineering firms let the companies push them around about how they manage the data.
Hmm. Where is that coming from? Is this competition within the engineering firms and wanting to please the customer?
I mean, if the engineering firms are prepared to, make a few changes here and there, you get a very different result. And if you get that different, and the management's going to be happy with that, they're going to tell other people to use that firm.
Hmm.
I'll give you one example that I always cite, have you ever seen a PEA, a preliminary economic assessment, which is the first phase of, I guess the first phase is always the first resource, but when the first economic study is a PEA, and usually the second one is usually a PFS, a preliminary feasibility study, or pre-feasibility studies, or a feasibility study. But now, when you estimate capital costs in those documents, they're supposed to be, from an engineering point of view, plus or minus. I think the PEA is plus or minus 30%, and I think a PFS is plus or minus 10, and a feasibility might be plus or minus. I can't remember the numbers, but the plus or minus is different. But when you go from a PFS, a PEA to a PFS, almost always your capital cost goes up. If you really were doing these completely independently, you would expect half the time the capital cost to go down. You'd expect a normal distribution around that capital cost. Sometimes you've overestimated, sometimes you've underestimated. But I have yet to see a situation where the second study had a lower capital cost than the first study.
And more ounces, right?
More ounces often comes because they've done more drilling and they've converted inferred, and the more ounces often can come very honestly. But if you're building the same plant that you were talking about designing, why are you always underestimating the cost on the first study?
Yeah.
And sometimes it's blatant. Sometimes you just look at it, look at the page, and you just, from having done, been involved in building mines and designing mines as well as investing in them, you just look at the number and they say they're going to build a 4 million ton plant for that price. Not a chance. It's just not going to happen.
Yeah. So it basically is transitioning to ounces in the ground to ounces that you can have above ground profitably. That's sort of the mentality switch that has to happen here, as far as I understand it.
We actually have to take a more scientific approach to it, and and have a more honest relationship with our shareholders.
Right. When you, just
I
for the
say,
record,
it'd be funny if managements were to treat the shareholders as if they were owners.
yeah, well, it would be funny, because it doesn't seem like something it's going to happen, but it should be, as you said. Just for the record, by the way, for people listening, there is a difference between Dundee Precious Metals and Dundee Corporation, just so people are aware. That's going to become apparent as we talk here, but I'm just throwing it out there right now at the beginning. What about M&A? I mean, is M&A, or the lack thereof, sort of a symptom of what the industry has become right now, and what do you think will help us do more M&A?
Well, more M&A is going to look. Every mining company is depleting their resource every day, and so if they want to be more sustainable and have their company last longer, they've got to get involved in more projects, whether it's local projects close to a mill or close to a smelter or close to some infrastructure they already have, or whether they're getting in new projects. M&A is inevitable, but the markets, these companies are run by people with emotions just like everyone else. So when when the markets and stocks are down, it's very hard for companies to do M&A because they look at their stock price and say, how can I give away shares of my company when the shares are down so much? And truthfully, I mean, the formula that they have to look at isn't the value of their company, it's the value of what they're buying compared to what the value of their company is. And does this transaction make their company more valuable on a per share basis? And that to me is and when you can get it where both sides are winners on an M&A transaction, is that when you're going to see a lot of it.
Hmm.
And so we go through periods where you don't see a lot of it. We need to see more. We will see more, and when we do, we'll get to a period where there's too much M&A going on.
How far away do you think that is?
I'll be honest and say I have no idea.
Hmm.
But M&A is kind of essential because every company, it'd be hard pressed to find a mining company where if you did a pro forma of the next 5 years of production from their existing mines, those numbers are going to be lower in 5 years' time than they are today. Some of them already have development projects that they're going to fill that in with, and others don't. The ones that don't, if they want to maintain their production levels, are going to have to do some form of M&A or get lucky with a discovery. But even a discovery, if you make a discovery today, that will not be in production in 5 years' time.
Do you think it's necessarily going to be from the producers, though? I mean, what we're seeing last week, McKeown, early this week, Reunion. There's stuff moving, right, in the M&A space, but does it necessarily always have to be the producers buying something, or are we going to see big developers merging as well?
You certainly can see both, and as I said, to me, the calculation is a combined company of better value proposition than the existing companies. Reunion's a great example. We've been involved in Reunion for a long time, and when we were, when I rejoined Dundee Corporation after leaving Dundee Precious Metals, Dundee Corporation had a position in Reunion, and one of the first things I did is I guess I sold some shares in Reunion, and I sold it because I didn't like the deal that they had done with Barrick. I thought that was too tough a deal on Reunion from Barrick's side, and I thought the shares were fairly valued. As the stock, I couldn't sell all of it because there wasn't enough demand to. But as we saw Reunion drop in price, and Reunion's, we spent a lot of time talking to the company and actually sat down with them in a very candid meeting, saying, "What do we do here? We still own a big chunk of your company. Where is there anything here that has some value?" And we actually went and spent a lot of work looking at all of the trenching data that they had at Oko, which was the one project that Barrick didn't turn into. And we really liked it because we thought the opportunity to prove up a deposit. Now, we didn't expect at the time that they would have a 6 million ounce deposit. We knew it had the potential for that, but you never target that. But what we knew was there was potential for a significant economic deposit there. And really, you had this trench data, which are just a backhoe hoe drilling holes, not drilling, but putting a trench into the ground and sampling the wall rock. And you knew that it was saprolite, which is a very loose, already crushed rock, which you can mine and mill very inexpensively. So seeing the layout of that, we felt that without needing a lot of drilling, you could prove up a pretty decent resource that would show interesting economics. And as it turned out, as they not only drilled that off, they also drilled off a very major discovery. And whenever you have surface gold, the gold doesn't come from above; it comes from below. The prospect of having more gold underneath is very high. So it's worked out very, very nice, and it's a beautiful deposit.
Hmm. What I've been wondering also about M&As, whether gold producers or mid-tiers or whatever it might be, whether they chase, or developers, I mean, whether they chase gold specifically, or whether they're going to start chasing gold and copper, or even more copper, like what Barrick, for example, is doing, which is, I suppose, strategically moving more and more towards having a part of the revenue coming in from copper. And I'm thinking whether that's even so two things. Is that going to happen? And second of all, is that going to be a good thing because of getting some sort of a green premium, if you will, to those shares?
Well, I think that it will happen because it should happen. Right now, there's no valuation difference between a gold miner and a copper miner. So if in the old days, gold mines traded at 1.5 times NAV and copper mines traded 5 or 6 times cash flow. Today, that gap is gone. So your skills are mining, and you're talking about rocks that often have sulfides in it, are found by using geophysical techniques and soil techniques. Gold and copper often occur together. As you know, at Dundee Precious Metals, we have the mine in Chelopech, which is a copper gold mine. And so the reality of it is, every one of these companies has to take the skills that they have and maximize them. And you're not gonna, if you see a great copper opportunity, you should take advantage of it. Just as if you're a copper mining company and you see a great precious metals opportunity, you should take advantage of it. So, and given that the valuation differential between base metal companies and gold mining companies is gone, I would hope that the management teams can take advantage of both.
Well, but that might be different too. Like what a great company to acquire from an M&A perspective is might be different from what a great company is for me to invest in. And like, what would it take for you, again, if hypothetically, if you became the CEO of Dundee Precious Metals again tomorrow, what would it take for you to go out there and buy a developers? Like, what would you guys look for?
Um, well, I mean, I personally, we believe that that's the key in any acquisition are what are the economics that you can bring to the table, or what is the special value proposition that we could bring. For me, the one I look for the most is quick payback. That's how long will it take from when you build the mine till you get your capital back. To me, that's the most important metric, because the farther out we go, the less we know about what the price of our commodities are going to be, the less we know about the cost of mining those commodities. So the most comfort you're going to have are the first few years. So if you can, we talked earlier privately about if you own a stock and you make a lot of money and you take your capital off the table quickly, you're playing with house money. It's not a lot different in mining. If it costs you $200 million to build a mine and you have a mine that can get you a really quick payback of capital, but but after that the economics are less secure. At least you got your money back, and and then you can go from there. So payback is a very important metric for us. We want to see that come back. We like to see, obviously, return on invested capital, return on capital. That all bodes well in the payback equation. So I don't want to say the same thing over and over, but we like them. We like deposits where you can actually see a lot of exploration potential. An area that has been underexplored, that has still room where you can bring some new thought to the table. Is there potential at depth? Those are all things that mean a lot to the equation. We don't want to do just a financial transaction. We want to do something where our analysis shows us something where we think we bring something to the table there.
Hmm.
That's why good M&A is hard to do.
Yeah. That's definitely a fair point there, and it goes back to what we were previously talking about. What's that specifically for you though? Like if you look at a PFS, um, what's a capital payback period that you'd be happy with? Like is it 2, 3 more years, less?
I think if you get a 2-year payback, you're looking in great shape. And in any projects, particularly if you have a project with an 8 to 10 year mine life, those are hard to find. And we spend a lot of time looking, as we invest in more junior stuff. There are times where we'll invest in exploration properties, but you can see that with the drilling they've done so far, they've drilled off what you could mine as what you call the payback pit.
Hmm.
Reunion was one of those, because they had that saprolite on surface. we knew that whatever they were going to find underneath there was going to have great economics, because you build the mine, you mine this saprolite, which goes, as I said, it doesn't need as much crushing. So your milling costs are a lot cheaper. Because it's already crushed, it doesn't need as much blasting. So your mining costs are a lot cheaper. And also you can put a lot more tons through the mill very quickly. So in a saprolite environment, especially with good grade saprolite, you're going to make a lot of money on the early years of that project. So whatever you find below that is going to be mined with house money, or even developed with the cash flow you generate from the start. And that's one of our investment themes is, can you start this thing small and use the cash flow to expand it? Which is also a great theme, because you don't need as much money to get going, and you can wake up 5 or 6 years and have something very significant on your hands.
When you say that, that's our investment theme or strategy.
One of our themes.
Sure, but what I was mostly referring to was Dundee Precious Metals as a producer, like doing strategic M&A, not specifically Dundee Corporation, where it's mostly capital deployment with the idea of getting a return on that. But sometimes it could be strategic M&A as well, especially with the producers, right? So how do you think they approach that?
Well, I know how they approach, because I've been involved in that. But I'll take Dundee Precious Metals, because I'm not involved in them anymore.
Sure.
But with any company, the first thing you look at is you look at your existing mines and mills. Are there any opportunities within X number of kilometers of those, where if you found something, your capital cost would be a lot cheaper, because you would just run it through your own mill or even expand your mill. It's a lot easier to expand a mill than it is to build a brand new mill, particularly from a permitting point of view. So that's the first thing you look at. You look in your own backyard. Then you look at other areas, and what does it take to get you involved in a brand new area? And I think with that, you're looking at potential. Is this something do I see this as the first mine of many in that area, and I'm going to have a leader's head start in that area? Or is this a one and done situation, in which case it's a lot of work to get involved in a new area and build relationships with all the local governments? If you're not going to be able to lever that into more business, it's going to be hard. But at the end of the day, you want to create a situation where you actually have a really good business, high returns on capital, quick paybacks. And those are the areas where any company, or the third thing is where a particular type of deposit very well. And you understand, an example would be when Dundee Precious Metals bought the mine that they bought in Ecuador. That mine is a similar type of deposit as Chelopech. So they knew how to manage that type of an ore body, the particular environmental challenges that you're going to have on that type, and how to conquer them in a way that's not just good for the company, but also good for the local communities and the people and all of that stuff. So those are the things that any mining company is looking at every day, and they're weighing all of the other opportunities against each other.
I didn't hear jurisdiction in there, like nothing that you would say, oh, I'm not going there, X, Y, Z, whatever it might be.
There are jurisdiction risks, but you look at look at Robert Friedland. He takes some of the biggest jurisdiction risks, but he offsets those risks with other risks that are much lower. He's gone to areas with spectacular geology, and he works very hard bringing in relationships, bringing in a lot of the partners he brings in on his mining projects can help him manage some of the jurisdiction risks. And at the same time, he gets involved in some spectacular, beautiful projects that you wouldn't find in other jurisdictions. So there are jurisdictions that all of us wouldn't go. And I think that any country in the world where the potential to get shot at is higher than normal is probably right up at the top of those lists. But for me, we try and take a total risk approach. And I say that knowing right now our strategy is much less risky jurisdictionally than it might have been 20 years ago. But at the same time, if we ran into something that was a once in a lifetime deposit, would we roll up our sleeves and try and figure out how can we manage the relationships here to be successful, we would certainly go through that exercise.
I like that a lot. I really like that you're saying this because I'm starting to get the idea of, especially me just recently being involved in a West African play and trying to tell the story to people privately. Most people are just like, oh, West Africa, I'm not going there. It's like, but you haven't even heard about the rocks. I mean, this could be exceptional. And so I like your approach there.
Thank you.
So I also like that I'm getting kind of an insider look into how these things work. And this might be actually a good idea to get a little bit more selfish from me here and specifically talk about JVs because it's becoming more and more popular in what seems to be a depressed financing market to have an exploration company dilute at the asset level and sign, say, a 70% or whatever earn-in option agreement with with the producing company, where the producing company funds all the exploration expenses over a period of time. That would be enough to get them through, let's say, the PEA level, the PFS level, whatever. And on the surface, it looks like a good deal, right? And I've been, again, paying attention and even profiting from this kind of deals, given, again, the state of the market. What I'm thinking about is how beneficial those deals are over the long run for the Explorer Coast. Because as a retail investor and a strategic investor, like let's say Dundee Precious Metals in this case, we're not always going to be aligned, right? Because I want to get the most upside on my stock and make the most money that way. And Dundee Precious Metals wants to build a mine for the lowest cost possible with the infrastructure and so on and so forth, as you said. So talk to me about that. How do insiders look at these kind of deals? Are they really beneficial to the smaller companies?
Well, the answer is yes and no. It depends on the agreement.
Hmm.
The devil in these things really is the agreement you get. And we an example, we did a deal. We did a partnership with Aura Minerals on the Borborema gold mine, and we worked very hard on working with them, and they were a pleasure to work with. Finding a joint venture arrangement that could work for both sides, and in that joint venture arrangement, you need veto rights as a junior partner on certain things. You need the ability to roll up your sleeves and do work against what they're doing. Also, to participate in the, the debt financing if they're going to be advancing monies on your behalf, or if you're going to be borrowing money with them. And as a junior partner, you also need an exit strategy. And how do you? What if circumstances happen that you can't make this work? How do you work around it? And so we were very fortunate. Two things: one, we had an excellent partner in Aura, but two, we also had a very good joint venture agreement, and we got to the point with that agreement that Aura was moving the project along probably a little faster than we were comfortable with. They weren't doing anything wrong; they were doing what they needed to do, and we converted our agreement into a royalty, and we're very happy with the royalty agreement we have. It's an excellent agreement, and they're still a great partner, and we're very excited for them to get that mine built, and that'll bring in some nice cash flow for Dundee Corporation. But the devil is entirely in these agreements. When you read about a 70-30 joint venture agreement, what does that mean? What happens if the 30% person, when they do have to write a check, can't write it? What protections does that 30% person have that if these guys want to build $1 billion mine, where you might have said, let's build a $200 million mine and scale it up? How do you protect against that? And so, to me, these agreements are good and bad. It's just dependent on the agreement. It depends on the relationship you have with the person you're doing the agreement with, and the financing relationship, et cetera, et cetera. Saying we were fortunate that we knew that going in, and we worked with them, and they knew that also, that a good partnership comes from a good agreement, and so we actually had a good agreement that was fair to both sides and gave everyone the ability to get to where they need to go.
Hmm.
But those are few and far between, and a lot of the ones, they don't post the whole agreement on CDAR, and you don't really get a lot of the devil, that the detail that we need to know isn't necessarily released to the public.
Hmm.
So
Whoa. what I'm thinking about here specifically is bullying, basically, because it seems like there's a lot of room for bullying if there's a $5 million Explorico doing a deal with, a $15 billion producer. So how do I, like, if it were my company, like if I start an Explorico tomorrow, how do I not get bullied on deals like this?
Well, you don't get bullied because it's your company. And at the end of the day, you don't have to do that joint venture deal. You need to actually sit down and make sure what you need to have in that agreement, and you need to be prepared to walk.
Hmm.
Because if you're not prepared to walk, and that's why a lot of these joint venture deals happen when a company's back's right against the wall and they can't, they don't know how they're going to pay tomorrow's paycheck, and that puts them in a tough position, and that's where they get bullied. But if you can actually, there's nothing wrong with a joint venture in every other industry. If you go in the oil patch, you see all kinds of oil wells where one company owns 20% and one owns 80%, and they all make money. At the end of the day, if you have a good mine and you own 20 or 25% of it, you can make a very good return on that, and that could be the cash flow that makes you into a real company. So the key is getting that good agreement. But if you're only doing that agreement because your back's against the wall and you can't raise any other money, then chances are you're going to get bullied. But if you're doing that agreement because strategically you feel that this project would be better suited with a major, then maybe you need to get 5 majors in competing against each other, and really get some deal tension in there and get a joint venture that you can live with. And a great joint venture agreement is a great thing,
Hmm.
and can be a great thing
Beggars can be choosers, though, in this market.
in any market.
It's true in any market. Yeah.
Yeah.
Well, the basically just for me as an investor means stay away from beggars. If the company is that kind of company, don't get involved with it. Is that right?
Well, and convince these beggars that you got to run your company so that if you have to, you can turn the taps off. Like, don't get yourself in a position where your spending can take you over that cliff, where you can actually turn it off and stop spending. If you can't raise money, let's the gold or the metal or the copper, whatever it is, it's not going anywhere. It's still there. It's still in the ground. You treat your asset as the untouchable. And if you have to put the company on, I'd rather see a company put on hold for a year than do a really bad deal that you can never get out of.
Hmm. And a lot of them are pushed into these deals because of, again, the tough financing conditions, which is to say low stock prices, right? Because their paper is just basically cheap. They cannot raise a lot of money. But that can oftentimes also mean a period like right now that's full of opportunities. There's a lot of cheap stuff that you can find out there. Is How do you deal with explorers? We kind of talked about developers here, the PEA, PFS level companies, producers at the beginning, but how do you deal with explorers over at Dundee Corp? How do you pick a good explorer, basically?
Well, I think same as anything else, you look at the data, you look at what they're exploring for, and we don't spend a lot of time where we're doing pure grassroots exploration. That's really for somebody else. But we do spend a lot of time where they actually have an initial discovery, and you look at the geology and you have to ask yourself the questions: what are the odds that this can turn into something special? And that's why we look hard at, can you model kind of a starter pit, an area where you can just go in and mine an open pit and get a bunch of capital back? Because if that's true, then that adds a very special dimension to the project, and means that whatever you find is actually completely value added, because you got your money to build, you get your money to build it. You're going to get that capital back. Whatever else you find is going to go right into the IRR and earn your positive return. So we try and choreograph a lot of that, where we can actually help make some good decisions, and knowing that where there is metal, there's going to be more metal.
Hmm.
And if you can see the economics shaping up positively, that's where you make some you can make some intelligent decisions.
From a risk reward perspective, yeah, I can totally see. I still, and maybe it's just me, but I find myself sort of at the beginning of my investing career really being attracted to these 0 to 1 type of opportunities, whereas there's nothing, and then there's the potential to find something. Whereas you're saying basically you're more matured, you look for these 1 to 10 opportunities. Um,
I want to see something. I want to see something that we say, if you continue this way, you're going to have something special here.
hmm.
Because if you can't see something, then you're really just speculating. And I haven't done well when I speculate. I like to think of myself as an investor.
I have looked into a position that is currently only a paper gain, but um, from that perspective. But I have also not really been successful in speculating on pre-discovery companies. It's fun though. Gets my blood pressure going. Not so fun for my wife, I don't think. But that's another point. John, what about? Oftentimes when I talk to people, they would say management's the most important thing. You know, that something special can be management. You say you're looking for something special and can be management. I'm not hearing much about that from you, and that's kind of interesting to me because you seem like sort of a tough cookie to crack. Like I wouldn't want to be pitching you on Explore where you're questioning me. How do you judge management teams?
Oh, management's very important, but there's nothing that's the most important to you. This is the problem and the blessing of the gold and mining industry is everything's really important in this industry. And management is, a bad management can screw up a great deposit. And there's 100% truth to that because we've seen it. And I'm not going to give examples because uh, it's not fair to the people because it's my judgment of bad management. But the reality of it is, you really want, when you're making an investment, you want to understand what the philosophy of this management team is. You want to look at their track record, but track records don't always mean anything. I mean, I've invested and met with groups that they brag about their track record. They just sold this asset to this company for hundreds of millions of dollars, and then you go look at the company that bought it, and you find out that they wrote the asset off and they downgraded the resource right after they bought it, and that they weren't happy with the acquisition. So sometimes, what you really want to understand is what's their philosophy. Do you have a shared vision? What's the investment process? How are they going to look at this? How are they going to spend the money you give them? You're going to give them a check and you're going to own a piece of their business. How are they going to spend that money? Are they going to spend it in the same way that you would spend it if you were at the helm of the company? I find you spend a lot of time talking with these management teams beforehand. And truthfully, one of our rules now is we almost always want some form of board representation
Hmm.
because we want to have a say in how the money gets spent, a say in how, the allocation of capital is the most important decision these companies have to make, and how they spend it. How are they going to take that and use that to choreograph this asset into something that's eventually going to be an economic mineral deposit? Is very important. So don't get me wrong. Management is really, really critical and vital. We spend a lot of time talking with management groups. We spend a lot of time fighting with management groups. And there's nothing wrong with arguing with the management groups. If you have a good management group, they'll fight back. They'll push back. You'll have a good argument. At the end of the day, either I'll be convinced that I'm wrong, or they're going to be convinced that they're wrong. And we're open to being wrong. I think that these are a lot of these decisions are hard decisions, and you need to have, one of the things the industry is missing is more peer review. And you bring in another geologist. I used to say if you had 5 geologists, you had 20 geological opinions. And there's a lot of truth to that. But why not hash all that stuff out? Get in a good structural geologist. Look at this thing. Our technical guru, Dr. Julian Barnes, who I've worked with many, many years, the best you'll ever get from him when you look at a geological interpretation of an ore body, the best he'll ever say is it's plausible. And it used to, when I first heard, I used to get angry, like, why won't he take it? But the truth is, that's all it is we're poking holes in the ground to make estimations of what might be there. And the truth is, can a creative person draw different frames around what's been drilled? Yes, in many cases they can. But plausible is the best you're going to get.
Hmm.
And that's okay. Plausible is very often, and the more you drill, the other thing that Julian likes to do is every hole that's drilled, he'll have the geologist tell you in advance what he expects to hit or she expects to hit. So they're going to drill a hole and they're saying, based on the model we have, we're going to hit an intersection at this level. If you hit it somewhere else, then you have to go back to your model and say, why is my model giving me a different prediction? And you obviously have to at some point alter your model. But I think those are, good discussion, good debate, and good decision making are very key to a good management team. You need that.
But we've been talking sort of on the positive side, and you've obviously been successful yourself, but that's not been without losses. I believe you started sort of investing your own money when you were 15. You bought basically one position with your entire net worth that you broke even on, which is better than my first time. But then it was sort of an opportunity cost because the stock ended up tripling after that. I know this, by the way, from Tommy Humphrey's report that he wrote on you. So that's at thebigscore.com for people listening. They can go and read that. Actually gives a very good background on John here. But so what, talk to me about a time you lost so much money that when you think about it today, it still hurts.
Oh, my dad used to say, I choose to be an optimist because I've never met a rich pessimist. But he lived before all these great shorters and made money in the marketplace. But I've definitely lost money on stocks. I lost, but I just can't remember. Usually, I'm so close to the market. Usually, I don't lose too badly because I can see what's going on.
Hmm.
I can see that things aren't going my way beforehand, before they get really bad. But I'll tell you a great story. So I just can't think of one where I lost all my money. I mean, I remember, but the great story is years ago I went on a mining trip, and I remember it was in northern BC, and I saw two projects. And the first project was supposed to be in production in 2 weeks' time. And when we got there, there was snow on the ground. The mill wasn't even constructed yet. The mill was in pieces on the ground, and they wouldn't let us underground. They said, so we've changed our mind. You can't go underground and look at this thing. But you could see that it was a mess, and that was a bust. And so we went to the second project, and we were flying around by helicopter. We choppered into the second project, and the second project was beautiful. It was a great asset. We actually did a lot of investing there. And I remember coming back and talking to one of the guys that I worked with and he said, so how was it? I said, the first one was a complete bust. The mine's supposed to be in production in 2 weeks. It's not going to be in production in 6 months. It's a mess. And all this. I was in my 20s at the time, and the other one was beautiful, and we love that. We recommend that. And about a month later, the guy calls me up and says, I want to buy you a really special lunch. Come to lunch with me. He was one of the senior, I was in my 20s. He was a senior executive at the firm. And he took me to lunch, and I said, why are you taking me to lunch? And then he explained to me that the one that was a mess, he had shorted that stock after he heard my analysis and made a lot of money on it. So that was my eye opening, that you can make money on both sides of a trade. But yeah, I apologize. I can't remember any of the ones that are painful. I think that's why you get out of this business. You don't ride the bad ones down. Is the key. It's the key message there.
Well, this speaks volumes, actually. Sort of cutting your losses short. Basically, it's a good way to think of it. Is there something that you would Like, would you never hold a stock after it's down 50%? Like, are there any fixed quick rules that you follow?
No, what I look at is when a stock starts doing the opposite of what it's supposed to do, I actually revisit it and ask myself, why did I buy this? And is the things that you're buying it still true?
Hmm.
And where I find, the right decision is often if you bought it for a reason and that reason's not true, you probably should sell it.
Hmm.
But if you bought it for a reason and the stock's down, but there's a new story here and it's still worth more, and because someone's spinning a new story, that's probably a bad reason to hold it.
Hmm.
That's where people get trapped. I bought it for $5 a share, and I thought it was worth 10, and now it's at $3 a share, but it might be worth 5. And probably better to take your 3, run, and find something else
Hmm.
because the
It's
news
interesting.
story often is an excuse rather than a story.
Fair point. Especially that last point. It's interesting how you talk about those stocks in dollars, and those typically for me would be in cents, between 5 cents and 3 cents. Shows kind of the quality
Oh,
that I'm willing to take. No, I know what
excellent.
you mean. And I know that you have to go here, John, because we're actually at the top of the hour, and I'm already taking more of your time. And I'm sure that there's plenty more stories where that came from. I hope I can speak to you again sometime in the future. What am I forgetting to ask you though here at the end? What did you come here hoping to talk about, but I'm failing to bring up?
Well, I mean, I think the thing that I would love to talk about is, the approach we're taking at Dundee Corporation. We are an investment company. We're publicly traded. We trade at a very large discount to our net asset value, and I think our approach that I've outlined is very different. We try and look at these stocks that would be speculative to a lot of investors, and we try and take a very professional view, sign a CA, and you can look and see when we make an investment, we've done a lot more work than most people are even capable of doing because we've gone beyond the publicly available information and taking in a professional team to look at this thing in a professional way, and in many cases, third parties' eye, with a similar result. Our interests are aligned with all the other investors out there. So that's kind of what we do that's different.
All right. Well, thank you, John, for the overview. Yeah, as I said, this was fun conversation. I'm happy to speak to folks who don't do as many interviews out there. It's refreshing to get a new voice and a new opinion. So thank you. I really do appreciate that. I'll let you drop off now, though, as I'll move over to the CEO barbecue portion of this episode, where I've got 3 companies today, all of which first-time visitors on the barbecue. But I won't talk to them before I let you know that, as always, here at Resource Talks, we don't hate you, and therefore you should know that I have no idea what I'm doing. I'm not going to pretend to be an expert. I've never made any serious money in this space outside of some paper gains that I have going on right now. And I should just not be considered any type of authority here. It'd be easier probably for me to create content if I was going to trick you into believing that's the case, but there's enough of those out there. I am also here to make money, though. And one way I do that is by getting companies to pay me for the production of these interviews. For example, Sendero Resources, which you'll hear from later on, specifically has paid for this interview. The other two haven't yet, maybe hopefully in the future, who knows? But you should be aware of that. And although multiple minutes of research might have gone into this, and although I don't send the questions up front, nor do I give the companies editing rights, I still own the IP and all that. You should still be skeptical of everything you see and hear in this video, in these interviews. These are all going to be general and impersonal private conversations between 2 talking heads on the internet. That's really what this is. So it only makes sense for you to approach this with caution and be aware of what you're doing. If you don't enjoy losing money, you should also talk to a professional investment advisor before taking your own decision in the end, because the mineral exploration, development, and mining industry is a very risky space to deploy capital in. And again, you should be careful. Obviously, forward-looking statements will be made here in these interviews. It's kind of hard not to do that when we're talking about the future. But please do pause the screen and read the warning that is on your screen right now on your own time. And I guess just be a sensible dude, right? Being sensible myself, although rarely, I think now should be a good time for me to start off with a flight to Argentina. I'm going to the Central Andes, specifically the famous Vicuña district, where I'll be talking to Michael Wood about Sendero Resources a gold and copper explorer co. Company is listed as Send, so that'd be SEND on the TSXV in Canada, where an average of about 200,000 shares trade each day with a 52-week high of 47 cents and a 52-week low of 16 cents. With a market cap somewhere between 12 and $13 million, call it 12 and a half, and about 66.5 million shares outstanding. Today, this is a 19-cent stock. I'm also seeing 14 million warrants at 30 cents, 1.4 million warrants at 20 cents, and 5 million options also at 20 cents, resulting in, let's call it 87 million fully diluted shares. About a fifth, 22% to be specific, is held by institutions and 33% by insiders, leaving about 45% in the hands of retail investors. Looking at the last interim financial statement, which is dated January 31st, the company had about $3 million in current assets, most of which, and that was $2.8 million of which in actual cash, as well as some account receivables and a little bit of prepaid expenses on top of that as well. I am seeing trade payables of $322,000. That's what made up the pretty much all of the liabilities on that date. There's also no long-term debt in sight. That same statement tells me that Sendero spent on average over that last 6-month reported period about $230,000 per month on what I would call administrative expenses, bonuses, and stuff like that, just anything and everything outside of drilling. Sendero has actually only really started drilling towards the end of that 6-month period. So the average monthly exploration expense over that period was not as high as it probably would be on the next financial statement, and came up to about $175,000. So technically less than the G&A. And it was made up mostly by setting everything up for the exploration program in the field, so materials and supplies, so setting up the camp costs and so on and so forth, so that they can start drilling, which they did, by the way, at beginning of January. As always, a fair warning here, I am reading numbers off a balance sheet, so this is only a snapshot in time, and it represents only a 6-month period, so things change. For a full comprehension of the entire financial situation here, please head over to the company's website as well as setterplus.ca to look at all the previous as well as the most up-to-date numbers by the time you're watching this. As things for exploration, this is an exploration company, right? So things will change. They change quickly, and so you should pay attention to that yourself, especially considering that, again, drilling has taken place on Sendero's project since. Speaking of which, although the most fun part, financial data, is not why we're here today. We're here to talk about rocks, I suppose. And for Sendero specifically, the flagship project that is indeed currently being drilled is called the Peñas Negras, which is, of course, as evidenced by my academic level Spanish here. I know what that means, and I totally didn't have to Google it, but apparently it means black rocks. Sendero owns 100% of what is a 120 square kilometers of claims, with an option to earn an additional 80% of almost 100 square kilometers of land adjacent to that land package. Again, an initial drill program was completed here, or at least the first couple of holes of an initial drill program were completed here. So there's about 8 holes, testing 3 targets here on this program. And most recently, so that'd be about 2 weeks ago, the company announced the first 3 out of 8 drill holes, one of which was drilled at La Olita target, which is where the focus is, I suppose, going to be on right now, but hopefully we'll hear more about that later on. And a highlight drilling here showed 256 meters of half a gram of gold equivalent per ton, starting at 84 meters deep. And that's, again, gold equivalent, so that's mostly gold. About 0.3 of that entire intercept was made up by gold. There's some copper, there's some moly, there's some silver in there as well. But so nothing jaw-dropping as of yet. Again, this is the initial drill program, first hole that hit anything in this project. But maybe more importantly, that drilling did hit an epithermal lithocap with argillic alteration, which is typically considered, you can call it sort of first breadcrumb in copper porphyry exploration. Mineralization here, by the way, started with a phreatomagmatic breccia, which is almost too technical for me to pronounce, but that's where 0.66 grams of gold equivalent was hit, and it was carried by argillic altered veins. Again, a technical explanation maybe, but basically summarized as not having hit the mother lode yet, but promising nonetheless. Again, early stage, so a lot of ifs and buts to talk about here, and we are going to do that further on in the conversation. But before any of that, first things first, Michael, well, obviously, thank you for being here, I suppose, firstly. And then secondly, I'm reading all these positive things from your presentation. You're doing a lot of interviews now these days. The news releases don't look too bad either, yet the stock is trading at what, less than half of what it was trading at about 2 months ago. What's up with that?
Um, no, good question, Antonio. And I think like we wanted to get out a first drill holes from the first three priority targets to the market as soon as we could. There were some delays on the SA results, so we got them out, and I think the market was, or some people in the market were a little bit underwhelmed by the results, right? I think where we are, there was a hope that we would be hitting, kind of bonanza grade holes, and look, we hope that we do as well in some of these follow-up holes. But I think we're also probing into a big system that is a covered system. And we learned a lot from that first hole, and we're very excited about what we saw. And we definitely do think it's peripheral to the core of this large system, and we can get into it what we see at Lagita, but really kind of three main potential porphyry centers with a big lithocap system surrounding it. And if that thesis comes true, that's a very big deposit. So, but we're very happy with it. I think one thing I've just tried to get across is it's very similar to the resource grades in the district, in the Vicuña district, very similar to Jose Maria, a little bit actually better than Caserones. So I think you need to put a little bit of context of location as well, the grading, right? This is a low-cost jurisdiction, low-cost labor, low-cost energy. So the grade doesn't need to be as high as in some places to make it work. And, a great rule of thumb is kind of looking at the local deposit grade, the local deposit cutoff grade on what is kind of economic in the district. So look, from our perspective, we were very excited about it. We believe it's a very economic hole above kind of the grade we were looking for. But yeah, we do think we're going to vector in, and as we get more to the center of this system and start finding the source of what's been feeding this lithocap, there's going to be high grade material, which I think is what the market likes to see, particularly in a new story, right? And some people I've discussed with, yeah, okay, it's similar grade, but you need to find some high grade sections of it to excite the market and just show that it's going to be higher than that in parts, and you can then blend it because it's probably going to be lower than that in parts as well, right? So it's been a difficult couple of weeks, I think, for the stock because it's come off, and just one hole is really hard to really give too much guidance on. So we're keen to get more holes out ASAP, and working to do that as soon as we can with the help of the laboratory, and hopefully very shortly, we can get out a new batch of holes. And once people see 3-4 holes from this target, I think it'll give them a lot more insight into what we're seeing and the potential we see at this deposit. And I'm optimistic that the stock will be a lot higher on the back of next batch of results. So yeah, it's the market. It's been a challenging couple of weeks for our share price. But having said that, I can tell you there's been a number of the world's major mining companies that have reached out on the back of that drill hole. And since we've signed confidentiality agreements and moving forward quite fast with them, looking at the data that we have in the company. So some people, were very excited by it, and I think unfortunately the market was a little bit underwhelmed and wants to see a bit more information. And fair enough. So we're in a position where we're just starting out as an exploration company, and we want to show more information as to what this deposit looks like, and we'll hopefully get that out as soon as we can to the market.
So a couple of things to talk about there. That soon as we can, I will want to know what that means as we move on. I also want to talk about strategics and stuff like that. But you bring up an important point here where you see larger companies are reaching out to you. And I sort of want to start with the how behind that. And what I mean here is that the Vicuña district has recently been a hub of very, very large discoveries, amazing, really, discoveries by proven operators. Like the right people are finding the right rocks. That's what it's coming down to over there. That's why these market caps are so high. But the question then comes up, how do they miss your patch of land during their staking or buying process? Like they clearly they know what they're doing. Why wouldn't they buy your package before that?
Yeah, no, great question. And the simple answer to that is we bought it first. And Hernan, our CEO, bought it in 2018. And if you go back to 2018, the district was not hot. Actually, the Landines still had most of their assets in the old NGEX. They spun them out into the 3 companies in 2019. And it wasn't really until 2021 and the Bonanza Hole 41 at Philo that the district started to explode. So, we were there and picked up the deposits back in 2018. and of being able to gradually move things forward as a private company. Obviously, we don't have anywhere near the same kind of resources as the Dundee group of companies do. So it's been a slower process. And we just went public in October, raised 5.85 million on our IPO for this initial drilling. And look, what we'd love to do is now escalate the activity that we're doing on the property, the amount of exploration we're doing. But obviously, we need the resources to be doing that. And that's something that we need to focus on over the coming months to hopefully give ourselves a lot more resources for a bigger field program coming up later in the year, in the Argentinian summer spring period from 24 into 25.
Right.
So it's a good question, and I think it's a case of Hernan picked it up first. I think also the Lundines mainly operating in San Juan and Chile. They do have some claims in La Rioja, in a different province in Argentina, but they're not actively working those claims. So maybe there's some aspect to that a little bit as well. But look, they're very supportive of what we're doing. They've let us use access road free of charge. They've lent us some machinery. Our team has dialogue with their team, and they're very, very supportive of us. And I think they have so much on their plate at the moment. They've got some amazing deposits that they're advancing towards mining, and we're a small new exploration company in the district, and I think we're not really on their radar from that aspect. But we'll see how things develop over the coming months and years in that relationship.
Where I'm coming from with that question is because I'm just trying to figure out, I mean, is this a neurology play or more of a geology play? But it sounds to me like a geologist first bought it first. Like, who's the person who got that land in the first place? Who picked it?
Yeah, so Hernan's actually a mining engineer.
Okay.
He ran Barrick in Argentina. He ran Yamana Gold. He ran Anglo Gold Ashanti. Oversaw the construction of Valadero, Guacamayo, and the Anglo Gold Ashanti mine in Argentina. Ran big mines for major companies before that in Africa and Nevada. So, a very established operator, kind of retired from the corporate world and bought a number of projects. Also has an operating copper mine down in Patagonia, where he's got a partnership with a mining company, and this property in Vicuña, which he's always been very passionate about. And he had friends that worked on our property for Eldorado Gold back in the mid-90s, and they said to him, like, this is a very exciting property. You should pick it up. It's available, and he did. So like it's great to have it. It's a big property in a great jurisdiction with some great geology on it, and we're just starting out exploring. And I think even at La Gita, which we've vectored into, we put 6 holes into it. We still just feel we're probing it, right? There's so much to do, so much potential. We really want to get our teeth into it in a much greater way than what we've done this field season.
Could that also be a thing, like the province that you're located in Argentina? Could that also be part of the reason why maybe no one else picked it up before 2018? Like, is this really a good province to be in Argentina?
Yeah, no, that's definitely a question as well. And it's not a mining province. It's a very small province. About 300,000 people live there. No operating mines right now. First Quantum also doing a drill program this season on a property further north. There's also a private Chinese group doing a drill program to the east of us. So this is the first year actually in a long time there's been active exploration drilling taking place in La Rioja, and they're very keen now to develop mining. They see, okay, what we have is very prospective. Apparently the First Quantum property is quite promising. So they're very keen to try and get a mine. They've seen the benefits that have come to San Juan to the south of them and Catamarca to the north. And for a very small province, if they could get 1 or 2 mines come on board, it would make a big difference to their economy. So now I think that they're fully aligned. They've been very supportive to us with everything so far. Really been very supportive. Everything has come as they've said, and very, very good to work with them. And I think also we've now got a joint venture with the province where we've optioned ground to the east, and we can earn into that ground over 4 years. And that would be a joint venture with the actual provincial government to develop that ground. So, from our perspective, very, very happy. I think also some background, Hernan had previously worked in La Rioja for Barrick. So that definitely, he had some relationships already there. And I think that helped. But yeah, look, they're very supportive, but it's not a mining jurisdiction. It's not like San Juan where there's multiple big mines. No, they're just starting out on this journey. So hopefully having some mines in their province, and it's relatively new to them, but they're very aligned and very motivated. And I think, you know, also it comes back a little bit to the dynamics in Argentina, Antonio, that now with the new presidency, they've cut a lot of the funding to the provincial governments, right? So the provincial governments now they're being told, look, you've got to go out and generate businesses, generate jobs, generate tax revenues yourselves. And they know that mining are big businesses, right? If they can actually develop a mine, even as a major exploration company, if we start to develop this asset and we have, you know, start moving it towards development stage and we have a couple of hundred people working up there, we'd be one of the biggest employers in the state, right? Even just as a development company. And if we start to become an operating mine and, you know, there's hundreds, thousands of people that are working for that, we would probably be the biggest employer in the state and the biggest taxpayer. So they're aware of that, and they've actually brought in some very business-orientated people as well, which is great to deal with them from the political level. There's a couple of the business guys that are helping as well with the relationships. So that's also quite a breath of fresh air to deal with. And yeah, you know, I think we actually feel we might be better in La Rioja down San Juan, because if we're back in San Juan, we'd just be one of many, right? Where I think here they've got a lot more desire to get a mine online and operating. So yeah, it's an interesting dynamic, and yeah, we'll see how it plays out. But so far, so good.
All right, fair enough. Interesting answer. Maybe one day I'll actually come down there and see how that goes up.
Yeah, no, definitely.
But it comes down to this is, yeah. What's that?
Oh no, I was gonna say it's beautiful. I mean, you know, I think probably some of the people who are listening have been to Filo or Josemaria. I mean, it's a beautiful place to visit. Amazing scenery. So yeah, I think as we advance the company, we'll start to do site visits, and yeah, it's a wonderful experience going up there. So
there's
yeah,
snow there right now, though, right?
Yeah, actually, yeah, it did. It snowed on the 13th.
Okay,
slightly earlier. Yeah, it's El Nino year, and it was actually a very heavy storm that weekend. So it derailed our program. We were hopefully going to drill for a little bit longer, but we stopped the Thursday evening before the snow came on the Saturday. But yeah, like kind of mid to late April, we're always working towards. That's kind of when the weather changes, and now it's extremely cold, like -15, -20 at night. So yeah, it changes pretty quick, and then it's like this kind of till end of September, then starts to warm up, snow melts. By mid-October, you can get on the site. So I think, you know, this year we opened up camp October 16th, and probably looking at a similar timeline for that. But now look, the bigger Filo operate all year round, right? You can operate all year round, but obviously comes with a lot greater cost and technical or logistical expertise. So definitely not something we'll be doing in the first few years of exploration, but definitely is possible as you develop the asset and the company.
Right. Okay, let's actually talk about this. You mentioned the asset a few times. You say it's geology, it's not neurology. I like obviously hearing that. Let's talk about that geology. You've now hit this lithocap with argillic alteration. So before people think I know what I'm saying, I don't know how to Google it. But basically, this is lower temperature stuff that has altered those rocks. And so that means that it's not as close as you would want to get to the source of a porphyry because of that lower temperature. And so, you know, you typically want to see propylitic or phyllic or potassic alteration. And that's sort of where my geology dictionary ends. But what's that? What you typically like to hit when you're looking for a porphyry is those alterations. So what gives you the confidence here that you're still on the right track if you're only hitting argillic alteration here?
Right. So I think a key thing to touch on is why Vicuña is special. And Vicuña is special because of the telescoping, right? So yeah, in the standard porphyry model, the lithocap could be kilometers above the porphyry, and in parts of the world it is, but not in Vicuña. And what you've had, you're right at the top of the Andes, and you've had the lithocap, the advanced argillic alteration, isophidation system gets eroded down. The porphyry gets pushed uplift by the tectonic forces, and they've merged into one ore body called the telescope system. So that's what Filo del Sol is, that's what Josemaria is, and that's what we've been looking for. And that's why to us, and I think some of the world's biggest mining companies that are aware of these deposits, it's very exciting, right? Because you get the high sulfidation lithocap system, and we've seen 2 stages of porphyry mineralization right below that in this first hole. 2 pulses of porphyry mineralization have come through. We've seen porphyry clasps in the breccia. So we definitely haven't hit the center of the porphyry in this first hole, but we're not that far away. And what you're seeing is a case where these merge. So, particularly at Philo, you've got this lithocap, which is substantial. And then below that, you've got a load of basically vertical porphyries, what the geologists call porphyry dikes below it. And then, they found in hole 41, bonanza grade for a long, long way. And that was the main kind of feeder system of this lithocap. So look, lithocaps can be barren. They often are. But when they're mineralized, they're great hosts of mineralization. It's almost like a breccia. It can be very continuous mineralization. Once you start to get your teeth into it, it's quite easy to step out and consequently quite easy to mine. So you can see from that first hole, it's a very continuous mineralization through it. We literally put on the whole hole so people could see. And it's very continuous mineralization in that first hole. And look, we didn't drill out the bottom of the porphyry. We actually drilled into a post-mineral fault. So what's happened is a very big fault. We drilled it for 110 meters, didn't come out the bottom, came through after the porphyry and basically just obliterated everything. There was mineralization in it, but a lot low grade, right? So, it's complex geology. There's a lot of folding up there. Definitely something we need to learn. But that's the beauty of Vicuña, that the fact that you've got these telescope systems where the high sulfidation lithocap has merged into a porphyry to become one giant ore body. And look, a lot of the silver mineralization is coming from the epithermal print. So if you look at Philo, they got some amazing silver holes. I forget the numbers off the top of my head, but like kilometer long silver intercepts. And that's because the epithermal part of the system has got mashed up into the porphyry and gone down, a kilometer deep from surface. So very unique geology. But that's what the excitement is about. These big telescope systems create these supergiant deposits, right? So to give some context, Escondida is kind of the flagship copper mine in the world, owned by BHP and Rio Tinto, an amazing copper deposit. It's about 5 billion tons of ore, right? Already the Landines are past that with their discoveries, already, between the 4 deposits that they have. So, and they're still scratching the surface as well. They've got loads of other great targets. I mean, Lunahuasi has come from nowhere, right, within the last 12 months. Nobody knew of Lunahuasi 18 months ago. And now, an amazing discovery. And I'm sure there'll be more. I'm sure they will discover more. They have a lot of targets. And look, we have a lot of targets on our property that have never really been explored as well. I think this is a key thing to get across. People often ask me, well, how did you get it? And why has nobody ever explored it? Now, until the Landines made these discoveries, everybody thought this was a gap between Maricunga and Al India. So like the likes of Anglo-American scratched our property, Vale scratched our property, Eldorado Gold did most of the work, Barrick scratched our property a bit. They did a little bit of work, but they never really spent a lot of time and effort exploring it. But now that perception has changed, now these massive deposits have been discovered in the district. And now I think, the eyes of the major mining companies are firmly on the district and are very interested in its future.
Yeah. And so it's time and effort and money. And that's something we're also going to be talking about here in a couple of minutes. Let's just kind of stick to the grade question here, maybe, because so the equivalent grades look decent in gold numbers, right? It's almost 0.6 in gold equivalent, but gold is not the only thing. As you said, there's silver, there's copper, there's moly in there. What part of the system would grades typically pick up where they go? Maybe only the gold grades are already above 0.5, because I think that's what Philo is doing right now, right? I mean, I think the overall resource is at 0.5 gold only, and then there's also 0.5% of copper on top of that, or something along those lines, right? So where would grades typically pick up in these systems?
Well, no, the Philo resource is 0.3 gold and 0.3 copper. Right?
Oh, yeah,
so,
0.3, not 0.5.
Yeah.
You're right. That's what okay, yeah.
Yeah. Right. So I think as well, and not many people actually know what the Philo resource is. It's quite interesting talking to people over the last few weeks. Most people have no idea what the resource is. So it's 0.33 copper, it's 0.33 gold, and it's 11 grams of silver. Okay. So look, this is a low-cost jurisdiction. I think the best that we have 2 amazing proxies. We have an operating mine, Caserones, which is a great mine, produces a lot of money. Have a look at the financials of Caserones. That's operating at 0.28% copper and 100 ppm of molybdenum, like 0.01% of molybdenum. Jose Maria, the NPV, I forget what it is, it's about $3 billion on the numbers they use. It'd be higher today, right? Because the metals have run. And they outline in their feasibility study, the estimated operating costs. And it's $6.8 for mining and processing, right? So $6.8 per ton of rock to mine it and process it. So look, we've always been of the view if we can be finding $25 to $30 a ton rock value across a deposit, that's a very economic deposit. Assuming we would be, let's say we're slightly high cost than howsoever, like $6 to $8 a ton. Let's say we're $10 a ton for mine and process. You know, if we can be making $15 a ton minimum profit from the rock, that's a very economic deposit. So I think, you know, it's also just explaining to people like the cost of operating is a key factor in assessing the grade, whether it's going to work. And the grade in Arizona or Nevada or BC or Western Australia is going to need to be higher than in Argentina or in, you know, parts of Africa. That's just the way it is. And the grade is, you know, part of the revenue equation. And then the cost side of the equation is actually, well, it's been shown to be over the last few years actually more important. You know, we've got metals at all-time highs, but the equity prices of the major mining companies are nowhere near that all-time highs because they've had cost blowouts, right? And they've had a lot of their operations in Nevada, in Canada, in Australia, and the costs have gone through the roof. And I think also from their perspective, now they're starting to realize, okay, like tier one jurisdictions are good, but they're expensive. And the most important thing is that we make profit, right? So it's always a trade-off, you know, between risk and reward. But definitely Argentina is a very low cost jurisdiction. You've got very cheap energy, you've got very cheap labor. Therefore, you don't need the same kind of grade. Now, having said that, you know, there's a couple of porphyries in BC that are mining like 0.2, 0.3, right, and make good money. So it's a case by case basis for sure, and you need to have the economics to get the property developed. That's definitely a strong case to be made. You know, if you don't have the MPV to make somebody want to come in and develop the mine, it's never going to be developed. But it doesn't need to be, you know, extremely high grade to get to that point. Often it's more a case of scale, right? If you do have multi-billion ton deposit, you know, the MPV of that, although it's tracked over multi years, will be billions of dollars. Like, you know, even, I mean, like, to give you some context, Antonio, you know, a lot of people, like, for example, we have zinc in that first hole as well, lead zinc across the hole. We didn't report in that first hole, but I think maybe in some other holes we will because we think it will be high grade. Now, for example, if you have 1 billion tons of rock and you have 0.2 zinc value, that's at today's zinc price, that's $5 billion worth of zinc, right? So you think 0.2 is nothing, right? But, you know, that's a peripheral metal that could generate you $5 billion of revenue. That isn't even a core metal, right? So the scale is definitely a key factor in these and what the big companies want. And it's very hard to find the scale. And that's the excitement around Vicuña. A new district has been found with massive scale. So like, yeah, look, I really hope we get some high grade holes very soon. I think the market will like it and it will make our share price and the job of raising capital a lot easier. But I think we're also just trying to explain to investors that this is a very economic grade where we are. It's actually in line with the two best proxies we have, Caserones and Josemaria, which are, again, are similar deposits because they're shallow, low strip ratios, which we believe we will have at La Gita. And so, you know, very economic, we feel, even on this grade and lower grade, as long as we can get the continuity of the mineralization and start to show the scale. And all the targets we drilled, we really focused on scale targets. And maybe we do have some targets on the property where we do feel we could have got some high grade holes, but we're not sure the scale's there, right? So we haven't focused on them initially. And I think, you know, it's a case of, look, we need to show the market a lot more drill results, and we're optimistic there will be high grade holes. But I think we're also just trying to say to people, look, even on this hole, you know, some people were underwhelmed by it and the market sold off on it. But, you know, look at the comparables around us, the very good proxies, real life proxies, this is not speculation, that this kind of grade would work as long as we can find a scale.
Right. Okay, as long as you get, well, it's still a big if.
Yeah.
And that's what you're after. And that's, again, a lot of things that we're going to keep touching upon. When you have zinc and other stuff in there, though, that were indeed not in the assay table, is there anything in there that's going to make your metallurgy more complicated? Are you assaying for arsenic or mercury, any other nasties or something else that just makes your metallurgy more complicated?
No, I don't think so. And like the way we kind of see it is, it seems the lead zinc silver is an epithermal overprint coming together, and then we think the copper gold is more of a coming together from the porphyry. So that's the kind of way we're viewing it at the moment. Still very early days, but you know, I don't think it's complicated. And like, yeah, we will definitely start to do some initial metallurgy as well. We want to see what it's like, again, understanding. And I think, yeah, if we can also start to show that this lithic cap is leachable, that greatly reduces the potential capex of the project. Now, having said that, if you can show the scale, you probably don't, if you have the scale, you want to get high recoveries. So that's all ought to be kind of assessed. But look, I think we're just starting out, and I think this will be a problem for bigger companies than us. Our focus is to make a discovery, and I think where we are, if we can make a decent discovery, there'll be a lot of interest to take the property off our hands.
What timeline would you stick to that to get the property off your hands? Like, is this a 1 to 3 year thing or a 3 to 5 year thing?
Hopefully the first one, Antonio. I think the sooner the better. As long as the valuation is good, it makes our journey shorter and easier. But let's see. I think a lot of factors at play, and just starting out, so hard to gauge at this moment in time. But yeah, we're obviously in a district that has shown the potential, and the other players in the district are so expensive, right? So if you look at it from a perspective of somebody wanting to come into the district, if they can pick us up for tens of millions of dollars, it's probably a good punt to go that rather than pay billions of dollars for something that's a lot more established. But we'll see. We'll see how things play out over the coming year or two, I would say. But I think within 1 to 3 years, I would be optimistic we could have made a nice discovery and sold the property, sold the company.
You did have to pause drilling there, though, where you sort of reached the post-mineral fault zone, basically, as the drilling company advised against drilling any deeper, and that was about 340 meters deep, as far as I understand it. What are the
450? 450.
Oh, 450. Okay. So the hole was, and the fault starts at 450.
The fault starts about 340, and we drilled it for 110 meters. So 450, we abandoned the hole. Still in the fault zone.
Right.
So look, it's I can tell you, the advice of the drill controller is you're probably going to break the rod if you keep going, and it'll cost you $200,000 to $250,000.
Wow.
Which for a junior company, we don't want to be taking that risk. We had same issues in other holes. So look, we definitely want to get a better understanding of the structural setting here. And like we're discussing already, deeper geophysics to help with that. And definitely these initial holes have given us some initial understanding, but just an initial understanding, right? So look, heavy faulting is great. It helps with the emplacement of the ore bodies, allows them to come up, but it also adds complexity for sure to the exploration. And a lot of these, when the big intrusions come up, the big intrusion comes up, and it does create faulting and fracturing generally all around it, right? And that's kind of what we've seen at the top of it, which is kind of common. And there's ways and means to get through it, but it's complicated. You can step out, you can do what we've been discussing, like snorkeling, where they submerge the casing, etc. I don't fully understand, to snorkel through the difficult parts. You can do RC, is one thing that the drill contractor said we could potentially do. It might be easier to get through with RC and then go back to diamond once you've got through. So it's something we're learning about as well with the property. But just poked in some initial holes in this first season. So definitely a lot to digest and then plan for in the upcoming drill program.
The only snorkeling I know about is the one you do at a beach, but it's with this bull market, the supposed bull market. It's been a couple of years since I've seen a decent beach. So anyways, are you expecting this to basically slow you down in the future? Because we were talking about time, and that's where I was remembered of this fault zone. It's complex, as you mentioned. Does this make your exploration efforts more challenging from the time perspective as well?
Well, look, once we can understand the faulting and where it's going, it will definitely help us navigate around it. So that's what we'd love to assess, and I think some deeper geophysics could help us understand that in a better way, and then navigate around these faults. Outside the faults, the drilling was quite good, but in these fault zones, it was very tough and very slow, and definitely slowed us down in this initial drill program. So definitely a learning process. But for us and for our drill contractor. But I think positive on the geology that we're seeing. That's the main thing. That's what we're looking for. And definitely positive from that aspect. And that, like we touched on, that actually is a positive sign, the extreme faulting. Philo had extreme faulting, lost a lot of holes. And apparently we were being told the other day that they actually at one point proposed building a tunnel under their lithocap to drill from the tunnel. because they're having so many problems coming out the bottom of it. So you know, lots of things to assess and digest and then strategize going forward.
Where is the drill now, and where those because it's 5 more holes that you have to report on, right? Where are those holes going to be coming from?
All at Lagita. So look, we did the 3rd hole was the one we've released. Then the 4th hole was about 100-meter step out, and then drilled towards a magnetic high. And unfortunately, again, very similar situation to 4. We hit 100-odd meters of folding, couldn't get through it, and never got into the magnetic high. Then we did 5 and 6 in the more northern part, north of the magnetic high, in where we believe is a thicker lithocap zone. You know, we're quite pleased with what we see, and definitely very interested to see those assay results. Then 7 was designed to go right into the heart of the magnetic high, and like we can touch on, we've actually got 3 magnetic anomalies spread out, kind of going parallel east-west, and that central one. And yeah, extremely tough drilling conditions, and we never got to test the magnetic high. We came down, we did I think about 130 meters down, and very fractured rock. Also the nature of the high sulfidation, we have these allanite clays with the fracturing, makes it very tough drilling. So we couldn't get down. Then we decided, okay, we'll go and test the magnetic high to our east, which is actually bigger and further away, and never been tested in any shape or form. Nor actually has this central magnetic high either. Just to touch on this, so drilling, none of them ever touched this magnetic high. The Eldorado did. So we really want to test these 2 magnetic highs. And then the hole 8, again, we were drilling it, very similar conditions, very heavily fractured rock, again, the allanite clays, and then the snow came, unfortunately. So, you know, a little bit disappointing, but, you know, I think it'll be very interesting to see what those holes look like for what we did. And I think, you know, we're quite optimistic there's actually some good mineralization in them above it. And, you know, a good sign that if continue down, it could get, you know, quite exciting. But that will have to wait for next season.
Okay. Those 5 holes that you're, but so drilling is done now, right? I mean, you're just,
yeah.
Okay. Because there's snow, as you said. Okay. So 6 to 8 weeks from now, assay results. Do you think they're going to be late this time as well, or are you going to have them quicker this time?
No, I think hopefully we get out quicker than that, Antonio. And not the whole, but I think we can maybe get 2 or 3 holes out, hopefully within the next kind of 2 to 3 weeks,
Okay.
if not sooner, as soon as we can. I don't think we're just going to put out 1 hole, but once we have 2 or 3, I think we'll get it out as soon as we can. Because obviously we're not happy with what happened to our share price after the first round. And I think once people start to see more holes of hopefully ticking up in grade, you know, our share price will re-rate back up. And then probably a final batch within, say, I don't know, let's say 4 to 6 weeks, the final 2 or 3 holes. But I think, yeah, we're aiming to get out another batch ASAP. And yeah, as soon as we can, we will.
But the focus stays on La Lita to do these things because of grade. I mean, because at La Peña, for example, you didn't come up with any decent grade or anything worth reporting. So for now, you're just staying focused on this target, right?
Yeah, and look, I think we can touch on La Peña and Tambarius, and look, we hit 226 meters at La Peña, continuous mineralization from surface, average grade of 0.22 gold equivalent. So, you know, below our target grade, disappointing. We had higher expectations, but definitely interesting, right? And I think definitely some strategizing around where we should go next, and definitely one drill hole does not test the target. You know, we hit porphyry mineralization, we hit some nice brecciation with porphyry clasps in it, with K feldspar in the clasp, with type A veining in the clasp, right? Indication that there's a bigger porphyry at depth coming up and creating some interesting stuff. So yeah, definitely want to get back there, but I think, you know, we're a junior company with limited resources, and we really need to focus on using the resources we have to get our market cap up and get more resources. So, you know, we felt that our best use of resources this season was staying at La Gita. But our Sendero South target, we really want to test as well. You know, we've got a clustering of magnetic high anomalies. You know, looks very good geochemistry at surface. A great target that we do want to test, didn't get to this season. There's other targets on the property as well. Like what we also learned about the lithocap at La Gita. And we didn't know until we drilled that hole 3 and the following holes, that it was a lithocap. We knew that there was some reasonable shallow epithermal style mineralization there, but there was no core. It was all RC drilling, and you know, it's covered. It's a covered target. You got this moraine, the glacial tilt, the glacial moraine, so kind of soil and gravel covering it. So you can't see the geology. So, you know, for us then, once we saw the lithocap at Lagita, we also know there's other epithermal style targets on the property. We went down to Rizuko, which is down in the southern part where there's a big epithermal system. And there, yeah, we saw outcropping Figgy silica, advanced agitic alteration down there on scale with good gold geochemistry from historic sampling done on the property by Adorado and Vale, actually, down there. And yeah, did some fieldwork ourselves there this season. That definitely also looks a very interesting target. And I think what we saw from Lagita is the telescoping, right? So what we found was at La Peña and Tambarias, where we drilled at Tambarias at least, it was just kind of more standard porphyry mineralization, where what we're looking for is that overprinting of the epithermal and the porphyry to create the bigger scale and the better grade. So look, Tambarias actually also has an epithermal system north of it. Between where we drilled in the northern part of Tambarias is also some epithermal that we'd like to drill and understand that, see if that is also a lithocap. The team believe it is. So also these lithocap targets, you know, if we can find multiple lithocaps that are mineralized, that could add up to a lot of metal and would be quite easy shallow deposits to explore and consequently mine. So that's also something we started to focus in on. And there's two also epithermal systems we believe are lithocaps also on the government ground that we've optioned. So, you know, we've got 4 or 5 decent lithocap targets already on the property that we'd really like to start getting some drill holes into, not just at Lagita. But like Lagita, I think we feel is our most advanced and the best thing where we can show to the market an understanding of the deposit, hopefully start to find the feeder zones. And look, the feeder zones into these lithocaps are high grade, right? If we can figure out the feeder zone, we will find potentially some very bonanza grade mineralization. And that's definitely a key thing that we're looking for. And hopefully the deeper geophysics will help us with that as well. But if you look at all the lithocaps like Philo, they're obviously feeder system, beautiful, beautiful grade. Lepanto is a great example, actually, the team has been using in the Philippines. It's a big old lithocap. And the feeder zone into that was like bonanza grade stuff. So yeah, it's, you know, it's exciting, but, you know, we're just starting out and really want to get a lot better understanding of the deposit. And as we do, we'll start to be able to vector into the higher grade zones.
Where I came from with that question and why I mentioned La Peña here is because I'm basically wondering, how do you come up with targets so that you don't repeat La Peña, so that you don't go anywhere and you come up with holes that are underwhelming? What else do you use? Because La Peña was basically based on geophysics. It was soil and chip sampling geophysics. You're adding geochem. I'm sorry, I'm talking about geochem. And then you're adding geophysics on top of that now to find these mag highs. Is that basically the right combination so that you don't repeat those results from there?
Yeah, and I think like it is a porphyry. You know, we've hit it, but unfortunately the grade was lower. And I think, you know, we kind of feel it was just a single stage porphyry. It wasn't the overprinting, right? The epithermal overprint. If we had the epithermal overprint on that 0.2, it probably would have been similar, like 0.5, 0.6, but we didn't see it. So I think, yeah, that's kind of how we feel internally. Let's focus on the targets where we feel we have the multiple phases of mineralization, which will give us the higher grade and also should give us a bigger scale. So yeah, exactly. That's how we've kind of focused our resources after what we saw in those first 2 holes onto these targets where we feel we'll have the telescope systems.
Have you been able to better understand the system's relationship with the silver here, though? Because I'm looking again at that assay table that we've been talking about, and it doesn't necessarily seem like the silver responds to the gold grades. Like it doesn't necessarily go hand in hand as much as the copper, for example, does. So I mean, what's the silver doing here? How's that influencing the grade of the mineralization?
Yeah, we actually think the silver is coming with lead in an epithermal overprint more with lead zinc, and the copper and the gold are coming more from the porphyry style. But that's definitely like this early stage, Antonio. Let's assess that when we get more assay results. But that's kind of our internal thesis at the moment. And like I think we will get a pickup in silver grade as well in some of the following holes from what we saw in that first one, which was about 1 gram over the intercept. There was some high grade in it. I forget the highest intercept, but we think actually, yeah, the silver is more related with an epithermal overprint, not with the gold, interestingly. But that's still to be explored and, you know, understood in a lot more detail.
And that's where you want to go with following drilling, I suppose, later this year. You've mentioned in other interviews, I've heard you say 10,000 meters. Is that just a number you're throwing out there? Or is that more or less where you want to go to?
Look, I think we've got a lot of meters that we'd like to drill, and I think that's a number that we have in our minds that we feel would help us be able to really advance that G to get a lot better understanding of it, and potentially do a bit more testing on some of these other targets. But let's see. I think a lot of it will be the resources we have at our disposal. That balancing act of how much capital we have available to us and the dilution that would cause, and then assess what we want to do. So I think also it's not the end of the world if we do a smaller, we do the deeper geophysics, we do another smaller program to really kind of understand Laogita in more detail. Hopefully find a feeder system into it and start to delineate the size. But yeah, I think if we would like to do 10,000 meters plus, I think that's a sizable drill program. But it will be really what we have at our disposal. I think it'll be in the region of at least 5, but yeah, we would like to do 10. And I think, we're quite comfortable we could use that meterage sensibly. Just across Laogita, it's a big, we believe the Sitka cap is extensive. And definitely if these 3, obviously we try to test 2 of these magnetic highs. If we get drill holes into both of them and they're good, then that opens up a massive targets. The depth of them is about, the eastern one is the bigger one. That's about 1,000 meters deep. The 3D magnetics of that, and so very big targets. So definitely we want to get into those and test them with a few holes from different parts of it and understand. And then understand the folding as well. Sometimes the folding is the source, is a feeder zone into these litho caps as well. So with a better understanding of the folding as well, that will give us a lot clearer picture on the system. And then 10,000 meters on a big system that's hundreds of meters, well, potentially even multi-kilometer square is not a lot of drilling. So yeah, that's what we'd like to do, Antonio, but let's see how things progress over the coming weeks and months.
Yeah, that's what I tell my wife. I'd like to take you skiing, but let's see how the market progresses over the next couple of months. But more deeper holes, more expensive than I assume. How much money are you going to be, how much per meter are you going to be paying up there?
So like this year, our initial drill contract was $480 a meter, but with the devaluation of peso, it ended up basically being 650, unfortunately. So let's see. Hopefully we can get something around $500 a meter next season. We'll have to see how things are. But that region, let's say 500 to 700 meters.
But even
I think also
stuff.
Yeah, it doesn't really change in that much detail. They change from like NQ to PQ, blah blah blah. But I think it doesn't dramatically change the cost. It's I think we're looking in a situation where there's also economies of scale, right? If we're saying okay, we'll contract out a 10,000 meter drill program, we can definitely get the per meter cost lower. Than we could a 3,000 to 5,000 meter program.
Right.
So that's also something to bear in mind. But yeah, it very going to be event dependent, Antonio, on the upcoming news, our share price on the back of the news, and then capital that's available to us to go and explore.
Well, that's what I want to talk about. That's where I want to go with this, because $500 to $700 a meter, 10,000 meters, $5 to $7 million. You put in G&A on top of that, call it 6, 7, 8, maybe on the higher end, $9 million is what you're going to need over the next 12 months. How are you going to get that money? You filed a base shelf prospectus. Is that the main source of financing you're going to use, or are you going to go looking for the money elsewhere?
Yeah, look, I think we'll see. We'll be reactive for sure. I think we have about $4.5 million in warrants that expire in September 2025, 20 and 30 cent warrants. On drill success, I'd expect most of that money comes in. So that's also going to be factored in. And then, I think let's see how we are. And if we're in a situation where we do a smaller program, we wouldn't need to raise that much more money on top of that warrant money to go do that. But yeah, we'd like to do a bigger program. And I think we'll have to see what the market pricing is like. If the market pricing is still not favorable, then, maybe we do an asset level deal with a strategic. And if we could get an earning deal that substantially values our asset above the market, that's something that I think we would be open to if it comes to it, but would prefer it done at obviously a market situation. But market conditions are still tough, and I think you can see the news stories. It takes time for the market to believe in them. There's been a few new nice discoveries. There's really taken a long time for the market to really kind of believe that this is real and move forward. So let's see how the stock performs on the back of the next batch, 2 batches of results, and then we'll assess, our options and the dilution that would cause to the company based on that capital raise. So yeah, we've got options, and I think we're wanting to see these next results, and then we'll assess as well internally, on what path we take to get this capital. And it doesn't all need to come today, Antonio, as well. I think we could also, the major spend won't start again until the latter part of the year. So it's not like we have to get all the money into the bank account over the next couple of months. We do also have a window to go and raise this capital as well. So we have a bit of time on our side as well, which is also good to know, right? We don't need the money in a month or 2.
But so where does this base share of prospectus that you filed for $25 million, where does that come in your whole strategy? You also, by the way, that it's not, the news release is not up on your website, so I don't know how seriously I'm supposed to take this. So talk to me about that.
So it's in the process. It's not all being cleared yet. Once it is, we'll put out the announcement. And why we've done it is because we're a new company. So for the first 12 months, you can't issue. Now it's very popular what's called a life financing in Canada, which allows you to issue free trading paper, right? So in the first 12 months as a public company, you can't issue a life financing. So we've put out this base prospectus that allows us to issue free trading paper. So that gives us more options. If we didn't put it out, any financing we did between now and October the 4th, which is our 12-month anniversary listing, would have to have a 4-month hold on that paper. Now a lot of the major investors in the sector don't want 4-month hold paper. They want free trading paper. So that's why we've done that. So this is a few other things we can do as well with, having it. You can do like at the money offerings, and it makes it easier for bought deals and stuff like this. But the main reason was so we can issue free trading paper before October.
And you say it's not finalized yet. What do you mean specifically when you say that?
Well, it's not all been cleared by the Securities Commission.
Oh, okay, so that's basically why the news is not on your website.
Yeah.
Okay.
So it's just being filed, right? It's not all being approved, and it's not ready to be used. Once it's all been approved,
okay. Sure.
Yeah.
Makes sense.
Yeah.
What's is this a typical period? You filed it about a month ago. How long would that take to get approved and get everything cleared?
I think we're talking days now. I think it's pretty much that. So
okay, is that? I have no idea. Like, legitimately curious. Is that how it typically happens, or is it being slowed down for a different reason? What's happening?
Typically, yeah. It usually takes about 3 months, I think.
Okay.
So I think there's no holdups. I think we'll all be ready to be used in the coming days. So good to have it in hand. I mean, like, maybe we issue 4-month hold paper. We'll see, but definitely gives us more options, and I think can give us more investors that will give us money than if we had to give paper that had a 4-month hold.
Okay. Fair enough. Are you going to be participating yourself sort of in an open market, because it's basically you selling shares basically into the market? Did you have an insider policy where you say like insiders and directors always have to participate or own a certain number of shares or put a certain amount of money into the company each year? How do you deal with that?
No fixed policy. We'll see if insiders want to participate on the next financing. A third of the company is owned by insiders at the moment, so very strong insider ownership. Obviously, financed the company in the early days, bought the asset, vended it in for paper in the case of Henan. So yeah, we'll see, Antonio. I think there's a good chance they will, but we'll have to see when it comes to the financing and at that point. But for now, we're blacked out as we're drilling. We cannot buy shares in the open market. I've been asked that a little bit. We obviously I've had a drill report every day while we're drilling, so that's obviously okay. It's not assay, but it's pretty good insight that you shouldn't be buying shares on the back of having a drill report every day. So definitely. None of the insiders can buy until the drill assays have been released, and then we'll assess where the share price is and the financing aspects. But I think having a third of the company in the hands of insiders is a very strong position to be for us at this point.
Did that just kind of sort of happened, or is that a target that you're also going to keep as you go forward? Do you think that's going to get diluted down?
I think you'll get diluted down, Antonio. I think we do need a lot of capital to move these assets forward. So I'm pretty sure that it'll get diluted down.
Okay. Do you have an idea of what the average cost of capital is for you specifically on your shares?
Me? Not off the top of my head, but I participate in every round. Round. So even the IPO. So yeah, I bought shares in the founders, the seed, the IPO. So yeah, it's something.
IPO was 20 cents.
20 cents. Yeah.
Okay.
So 20 cents.
Fair enough. Talk to me a little bit about that potential strategic deal, because you make a good point. These things cost money to explore. These are deep holes, large projects, yada, yada, yada. You need a lot of money. You mentioned a strategic partner. That's something we're seeing more and more from companies, given the situation that the market is in, where you're diluting essentially at the asset level instead of at the equity level. What kind of a deal would that look like for you? Like if I came tomorrow and I'm like, Michael, I'm with whoever, I'm with BHP, and I want a JV on this. What do you want from me?
Oh no, look, I think let's see what options are presented to us and who it is, right? And I think we're definitely interested in understanding, the technical expertise that would come with it, the potential takeout options that it would bring. But yeah, I think we have to be, in a much better market where we felt our market cap was fairly representing the value of our assets. You would definitely want to just do it at the market level. But when you're sitting there and your market cap's what, 10 to 25 million is the range we've traded in so far. What we obviously believe our assets are worth a lot more than that. And if we could do a deal where it valued our asset more like 40, 50 million and our market cap's still like 10, 15, then, I think that makes sense. So yeah, let's see, Antonio, how things progress over the coming months. But definitely something that we're open to. I think, the main thing is we want to make sure we have the resources and the expertise to do a proper job exploring these targets. And that's our main focus. And, getting the cash and the technical expertise is obviously a strong focus for us. Me and Henan managing the company, and we'll assess all our options over the coming months.
Good. Well, it seems like we're actually going to have a whole lot to talk about in the coming months, which I'm looking forward to. I think I've gone through most of the basic stuff here that I wanted to go through. What am I forgetting to ask you though? What did you come here hoping to talk about, but I'm not bringing up?
No, that's great. That's a great overview. And I think, really want to get out more results, but take a step back. We have 212 square kilometers in the Vicuña district. We've already showed a telescope system, and we're showing that it has potential large scale. So we're very excited about that. And we really want to explore that in more detail over the coming years. And I think we can find similar such telescope systems on the property. And if we do, then this really starts to become a district within a district, which will be very exciting for a lot of people, the market, mining companies, etc. So, but we're trying to unlock the value we see geologically on this project. And great to gone public last year. We were one of the few new public companies in the space last year. So it was great to get that initial money. It's great to have gone and done an initial successful drill program where we've hit what we want to hit. A telescope system in Vicuña of reasonable grade, right? Okay, not your socks off bonanza grade, but in line with the nearby deposits. And yeah, hopefully we can get some higher holes coming out soon. I think the market will like that a lot, and we can move up and we can have a nice capital raise and go back and do 10,000 meters plus later in the year. That's what we'd like to do. But if we end up having to do a smaller program, so be it. As long as we keep advancing these projects and unlocking that value, that's our main focus as a company. So thanks for having me, Antonio. Great to get the story out. We're still a relatively new company. We have been quite frugal with our spend, as you touched on. We to get through this initial drilling. So definitely picking up the marketing. Now we have some drill results, and as we get more, want to do more and get the story out to more and more investors globally. And I think also the market sentiment is turning. We've had a very nice run in the market, in the metals over the last particularly month, and the stocks are starting to move, but still very depressed. And I think still a lot of scars and wounds from the investors in the sector from the last 3 years. I think it's a lot of investors are still skeptical on stories and want to see them really advance before they start jumping in a big way. So yeah, it's great to be here and excited about what we have, and really believe that we have something meaningful that we can unlock over the coming years.
What kind of G&A are you targeting, by the way, then for this year, if you're going to get more aggressive with the marketing?
Yeah, we'll see. I think, like you touched on that G&A number you quoted included all our listing costs, which obviously is substantial. Our
Yeah.
G&A for the last quarter was 380. And I think, more in line with that is kind of what we'll target. So,
So about
yeah, I
120
think,
to 150 a month, call it $1.5 million a year, maybe two.
yeah, I think under $1.5 million is kind of what we're aiming for, $1 million to $1.5 million, depending
Okay.
on how much marketing we do. But yeah, definitely, like I think I'm going to go to Australia, maybe Scandinavia. A lot of interest in Scandinavia or in Vicuña, and pick up the marketing as we have more information. It's particularly in this market. A lot of the investors I spoke to were like, "Sounds great. Let me know once you have some drill results." So now we're starting to get those. I think it helps for people to pull the trigger and get into the company. So yeah, it's a case where there's a lot of companies in the sector, but there's not that many exciting copper exploration stories. We are in quite a niche space, right? And I think we have the potential to make a major discovery, and investors like that and can resonate with it, and particularly with the valuation we're trading at right now, understand that it's a good time to be time to buy the stock.
You mentioned that you have 212 square kilometers. That's including the option, the JV that you have basically with the Argentine government. I didn't ask you much about that. Is there anything to talk about there as of now, or is that just kind of on the shelf?
Yeah, look, we're really pleased to have it. I think it was ground that they owned, and they were looking for a partner to help them advance it. So, we're very pleased that they picked us. I think it could have gone to a lot bigger company. So they've been very pleased with how we've operated and what we've done so far in the district. So, great to cement the relationship and help advance that ground. And look, I think we feel La Gita target extends into that ground. We feel there's two nice lithocap targets further east on that ground. We feel there's a lot of potential on that ground as well. So we're definitely pleased to get it and want to advance it over the coming period. But we've got these advanced targets already. We're starting to do some initial work on that ground, and I think La Gita southeast of where we are on that ground is probably the first part of it that will work, because I think we think there's the geophysics quite clearly shows that it's extending southeast. So that's a pretty obvious target to test in that initial ground. But yeah, we've got a lot of targets on our own, 100% on ground as well.
Good. Yeah. Well, all right. Thank you, Michael. I'll be hearing from you again, hopefully shortly. Good luck up there, and keep me posted. There's a lot going on, and I'll speak to you soon. I'll let you drop off now, by the way, as I'll be traveling to beautiful Yukon, where I'll be talking to Mike Bertkey. He's the VP of Corp Dev of Sitka Gold Corp, a gold exploration and development company. The company is listed under the ticker symbol SIG, so that'd be SIG on the TSX Ventures Exchange in Canada. We're an average of about 300,000 shares traded each day, with a 52-week high of 23.5 cents and a 52-week low of 8.5 cents. With a market cap of $55 million and about 250 million shares outstanding today, this is a 22-cent stock. There are about 16 million warrants ranging between 15 and 37 cents, as well as 17 million options, which brings us to about 362 million fully diluted shares. About half of the company is in the hands of institutional funds and family trusts, with some famous names like Williams Commodity Discovery Fund, Prescott Capital, and Sprott being a part of that. Management and insiders also own a part of this. They own about 15% of the company, and high net worth individuals and retail investors are estimated to own 35% of the company. Looking at the last interim financial statement, which is dated September 30, the company had about $4.8 million in current assets, most of which, so call it $4.5 million in actual cash, as well as some GST receivables and prepaid expenses on top of that. The balance sheet also shows me that there is no long-term debt, and there's about $380,000, or was $380,000 in current liabilities, most of which is actually just made up by the flow-through share premium liability. Not much else besides that. That statement also tells me that Sitka spent on average over that last reported 9-month period about $67,000 per month on what I would call corporate expenses. So think about marketing, travel, office, stuff like that. Although the payroll is not on the balance sheet line, it appears to be empty, which is curious. Hopefully get more details on that later on. As to the project expenses, though, the cash flow statement tells me that the first 9 months of the last fiscal year resulted in about $4.4 million of exploration, acquisition, and evaluation expenses, putting the average at about $480,000 a month. drilling itself representing about a third of that total cost, and the rest being spent on analysis equipment, camp costs, and stuff like that. This basically means that G&A represented only about 12% of the total spend, and the exploration to G&A ratio was at almost 7. So that's very healthy. You guessed it though, as it always is, this is only a snapshot of a 9-month period. So please do head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers. Sitka has also raised capital after this. They are an actively drilling company right now. They're spending money. So, and then the company, by the way, has a 53-page presentation on their website, so you have no excuse not to read up on what's really going on here. You already know that accountancy is the most fun subject out there, but it's not really why we're here. We're here about to talk about Sitka's 5 projects, which are spread across Canada and the US. And don't worry, you won't have to listen to me for the entire overview of the 5 projects, because the focus here recently really has been the Yukon, and specifically that's the RC Gold project, where about 87% of all the money spent on exploration went in during that 9-month period in 2023. This is a rather large land package as of recently. It's covering 386 square kilometers of land, which is actually not an exception, really, given that the Yukon is about the size of France, but instead of 68 million inhabitants, which is the case for France, there's only about 45,000 people living in the Yukon, just to give you an idea of scale here. After making the initial discovery in 2021 on this project, Sitka came up with an initial MRE on RC in early 2023, showing 1.34 million ounces of gold at an average grade of 0.6 grams per ton, contained in 2 separate but near-surface deposits, both of which they own 100%, and one of which is actually a bit higher grade than the average grade here. This is an intrusion-related gold system, so quite the same type, though far from the size of what Snowline and Victoria Gold and Banyan Gold have been drilling over the last couple of years. But again, it's the same type of geology, basically. Of course, Sitka believes that there is a lot more upside to this part of the Yukon, which is this is, by the way, between Dawson and Mayo, so it's very close to infrastructure. It's a well-built part of the Yukon that's got decent electricity and water and streets, basically, and stuff like that. And that's, by the way, why they've also just this week picked up some more ground there by where they're looking at a 2 by 1 kilometer mid-Cretaceous intrusion has been found having a similar fingerprint to that at their 1.34 million ounce deposit. But those targets have not been drilled yet, so I'm hoping again to get a little bit more background on them as we move forward in the conversation. As I said, there are other projects that I could talk about here for probably another half an hour, but again, with a currently ongoing 15,000 meter drill program at RC, I don't expect those projects to be the focus of exploration for Sitka moving forward, although some decent stuff was drilled at their Carlin type target in Nevada last year. So I'll ask for an update towards the end of the conversation here. But Mike, this might be a good time for me to cut the yapping here and have you explain to me this move this week. Why it seems like you have it had enough ground. Why the extra land here?
Yeah, it's not extra, actually. Just to clarify, it's called the Barney Ridge property, and back in 2016 when Corco, our CEO, started, he first started staking. There was a new access road into a new placer mine in the area. So him and his son Ryan went in there exploring, doing some prospecting, found a new showing, staked some ground, realized Victoria Gold was entering into the development phase. They'd been getting through the permitting. They'd announced that they were going to start developing. So Core started acquiring ground, and Barney Ridge was part of a package of claims that we optioned from a prospector called Bernie Kreft. And we optioned the Clear Creek and the Barney Ridge ground from Bernie. Last year, we sped up the process of completing the agreement with Bernie on the Clear Creek portion of the property that contains our Blackjack and Eiger deposits. So we completed the share and cash payments, accelerated that, and that's exactly what we're doing on Barney Ridge as well. So Barney Ridge hasn't been the focus yet, but it contains one of these Tombstone Age intrusions that has identified gold mineralization with it. It's not as far along, obviously, when we got some drill holes into Blackjack and Eiger. That's where our focus is really homed in on. So we haven't been able to, we've done little bits of work on some of the peripheral claims that we've optioned Bernie, as well as some claims that we have from some other prospectors that had toeholds in the district. So that was the motivation there. Just we're getting close to the end of that agreement, but we just wanted to speed it up and consolidate our ownership.
Mike, I think you should rename it to Bernie Ridge. That'd be very nice.
Bernie would like that.
Bernie would definitely like that. Yeah.
Yeah.
Bernie's doing some very good work up there, by the way. So shout out to him. People should look him up on Twitter. But okay, so this is not going to be a priority right now. Let's then talk about what is a priority, which is where you've been drilling. 15,000-meter program. You had over 10,000 meters done last time when you reported that hole 58. How far up that program are you now?
Yeah, that we've shut down for the spring melt here now. So we did 2 holes, a little over 1,000 meters. We have great access into the project area, so we start drilling in March typically. But then we get spring melt, so your roads go mucky and you can create, you know, a lot of maintenance down the road. So we'll take a break here, and then depending on how the spring melt goes, late May, early June, we'll start drilling again. So we have 2 holes into the southern part of the Blackjack deposit. Really, since we announced that resource in January of 2023, and it, you said 0.6 grams per ton, it's 0.68, the overall grade. But there's 2 deposits, Blackjack and Eiger. Blackjack has a grade of 0.84. And that's obviously been our focus. You know, any company is going to focus in on the higher grade of any kind of deposit or occurrence they have. So that's what we're doing. We're trying to define the limits of the Blackjack deposit. So we've been drilling to the south. That's where hole 47 was the best hole on the project to date. We drilled that last year. It was outside of the Blackjack resource, hit 20 meters of 1.3 grams per ton, contained a high grade intersection of 55 meters of 3.11. So we're able to access that area. So we're carrying on drilling to the south of that hole 47. Couple step outs from that one, about 60 meters to the southeast, and another one down dip from it. So yeah.
And that's gonna leave you 3,000-4,000 meters left now in the budget.
Well, we've got a contract to do up to 15,000 meters this year. So we've only drilled 1,000. So the bulk of our drilling we really do in the summer season. You know, it's nice to get a jump on the season and get up there in the winter. And just because we have good access, we've got a good camp, all those things, we can do that. You know, and you always kind of scratch your head. It does cost you a little bit more to drill in the winter. But you know, you can't predict the future. And in this case, you know, we contemplated, do we wait, you know, and wait till the summer season drilling program starts, or do we drill now and hopefully the price of gold firms up and we get a jump on the season and release some nice results in a rising gold market? And for once in my life, my crystal ball has finally worked. So
I hope you're right there. I was actually under the impression that you had done a lot more drilling. I thought, so I've misread the numbers. It's not my first time, but I was under the impression so you've done only about 1,000 meters out of
That's
this
correct.
15,000.
Yeah.
Okay, good. Fair enough. Yeah, I was under the impression you had done a lot more. What does that mean for your news flow over the next couple of months then?
Well, it means we should have results. Let's see, what is it now? It's getting towards the end of April. We'll have results likely in May here, early to mid-May for those first 2 holes. All the samples are into the lab now. We just finished processing the core the other day. So everything's been shipped off. So it's in the assay lab, just waiting for those results. So we'll get some results back in mid-May. So that's nice, gives us a jump on the season. And then again, we'll get back in there in late May, early June. And then again, another kind of month till we start seeing drill results again.
Okay. Are you accounting for forest fires and stuff like that? Because I know last year that was a thing.
No, I mean, you know, whatever, we're geologists, we focus on the positive. There were forest fires, but they really didn't affect us. Yeah, we're really lucky. Even the smoke didn't come into our camp. It was all around us. But because we have road access, we don't need to rely on helicopters, although we do use a helicopter sometimes for some of our drilling. We'll look at places where if you have to put, extensive roads in there, we'll do some helicopter drilling first in order to justify that road building. Just a bit of a decision that helps with your physical disturbance. We want to minimize that. So yeah, as far as forest fires and stuff, we really don't anticipate any big interruptions. I mean, most forest fires are started by man, so we're in a nice, even though we have good road access, we don't have a lot of people flicking cigarettes out the window, so we're in a good spot.
Fair point. Let's maybe talk about what you're going to be drilling once you go back to drilling. And I remember reading the objectives of this drill program, where you say that you basically want to expand mineralization and the size of the resource at both those deposits that you mentioned, which you say are open in all directions. But after this, hole that you've now reported has VG, so hole 58, which shows that it also shows that the intrusion continues at depth, as far as I understand it.
Yep.
Would it be possible that the multiple intrusions you've been hitting here are actually just sort of one big intrusive body at depth, or they just come together and feed that whole system and again create one big body? Would that be possible? And is that a thesis that you're willing to test?
Yeah, certainly. I mean, they emanate from some common source. There's a cluster of intrusions in the Clear Creek area. There's 6 intrusions right in a kind of 3 by 5 kilometer area. So, and there's these Lampreyfield dikes that are, sourced from the mantle. So there's deep-seated structures and intrusive rock types that are showing. There's the magmas that we're seeing are sourced from quite deep, and they evolve as they come up. So where that main magma chamber is and where these intrusive types evolved and then poked up, yeah, it's down there somewhere. Whether we step back and drill a super deep hole, I don't think that would be prudent at this time. I think it's wise to drill the resources and follow that geology down as we understand the geology and maybe get a better grip on where that potential, larger body could be. Yeah, then maybe you drill a deeper hole. There may be other types of geophysics that help us model that a little bit more. We've done some modeling with our magnetic data that, shows there could be something down there just all around those intrusions, geology on the ground. There's a big hornfels zone. Hornfels is just a fancy geology term for the rocks are slightly cooked up. And so they've been altered and changed. So that big hornfels alteration zone encompasses all those intrusions. So, there's a larger heat source emanating from depth there, and what's down there, hard to say. But with the advances in mining, I mean, it certainly hasn't escaped us to think, well, geez, if there is a big mineralized body at depth, because we're drilling fairly deep now, which might get to the limits of an open pit, but block caving and different types of mining techniques are becoming more common, and a technique that's causes less disturbance at surface and all that kind of stuff. So there's definitely that potential. And yeah, when the day comes to test that, when we're confident that we've got a good target and a good chance, the risk reward, then we'll look at that.
I appreciate the nice way of saying, Antonio, that's a crazy idea. We might look at it, but you're being kind of silly right now. It's a very nice way of saying that. Thank you. Well, you mentioned a block cave, though. Just for a second, would the topography allow that there, theoretically?
Yeah, I mean, I think topography doesn't influence block caving, right? Block caving, usually in big copper porphyries, you just have to be far enough underground that you're into a solid mass. You're not close to surface where, influences of surface might affect that. So as soon as you're down, I don't know what the shallowest block cave is, but I imagine it's something like a kilometer depth. So
Okay.
as soon as you're down to those kind of depths, you're fine.
I was just thinking about the weight of a mountain, which I suppose is heavy, and then weighing on top and then maybe making it structurally. Anyways, that might be a question for a mining engineer, but thank
Yeah,
you.
that's definitely a question for a mining engineer, but I think that's some of the idea behind it. I don't think you're at depths where, like where you're mining in Africa or some of the deeper mines in the world, where that confining pressure is such that you get rock bursts and different things that are going to compromise your mining. So I would say you're probably right that there is an ideal depth. I'm a geologist, so I know enough. I've worked in a little mine near surface, so I know enough to be dangerous, just like you. So there's probably an ideal depth for that block caving scenario, and it's I haven't heard of that applying to big gold mines yet, but seeing as it's kind of an emerging mining technology, I think we got to be aware of everything that's out there as a advantage that plays into the economics of your project. And we're hitting gold fairly deep down, so is something like that come into play? You never know.
Fair point. Yeah, and I know enough to pretend that I'm dangerous on YouTube, and that's working out well for me. So good for me. But you're hitting this visible gold on a step out hole from your best hole there, 47. So 58 step out from 47. Um, do you think mineralization might start getting nuggety, or that continuity might prove a problem on some of these step outs? Because I don't believe it's been a problem in 47 and the other ones before that. But with these step outs and with this VG, do you think that might prove to be a problem?
No, we've always seen little bits of VG in our drilling. I think that's the beauty of these reduced intrusion related gold deposits, whether it's us or Snowline Gold, Victoria Banyan. We all see visible gold. We've done different assay techniques, including, metallic screen that flattens out that nugget effect, and we don't see a big variability there. But these intrusion related gold systems are surprisingly consistent in their mineralization. So that's an advantage that they have. For instance, we're drilling an inferred resource. Our resource that we put out is inferred. And so even before, after the first diamond drilling that Sitka did was in 2020, and they hit some very encouraging results there that indicated potential ore grades. So before they entered into the 2021 drill season, consulted with a resource geologist that had done a lot of resource work on some of these other deposits, and came up with a plan for a drill spacing that would allow an inferred resource to be calculated. So we're stepping out at 100-meter kind of centers to intersect this body, and that gives you enough confidence to produce an inferred resource. And that's based on the knowledge of how these systems are mineralized and the consistency of mineralization. So yeah, it's an advantage. So no, I really don't. There's a long answer for a question. I don't expect it to get really nuggety or inconsistent. That's really not typical of these deposits. We do see, as I mentioned, some higher grade subintervals. Sometimes we come across larger quartz veins, meter size quartz veins that can run very high grades. But overall, they don't really influence the overall deposit a huge amount. They're nice little sweeteners.
Okay. And I do want to come back to here in a second. I made a note to come back to that inferred part of the resource and how you transform from that. But something else that I'm seeing at my notes, and again, I'm way out of my depth here, so I'm going to be looking at my notes, but you've encountered lamprifier dikes and sheeted quartz veins here in that hole 58. What would that mean for, if not the continuity, what would that mean for the geometry of the ore body, given how potentially the alteration would have changed the rocks around it and maybe turned the ore body around or something among those lines? And
Yeah, no, the lamprifiers are kind of a late thing, and the interesting thing is they're a deep mantle sourced intrusive rock. So they're more indicating that, there has to be a very deep continuous structure for those intrusive rocks to follow up. It indicates you're in a extensional environment that allowed these intrusive magmas to come up from depth. So it's a part of the system, interestingly enough, in a lot of the more gold mineralized systems, you find Lamprey dikes. So they're an important part of the story, and that's kind of evolving. Craig Hart has done a lot of research. I worked with Craig over the years, and that's an observation when we worked at the Yukon Geological Survey together, that we noticed these Lamprey dikes show up in these intrusive related systems that had good gold with them. And so they're part of the story. Craig's kind of really looking at the research end of that as to maybe these gold mineralized fluids are deep sourced out of these deep intrusive rocks. And as they evolve and come closer to the surface, they're driving the gold off. So that's more the research end. But as far as it changing the geometry of the deposit or giving you any grief in that way, no, there's nothing like that.
That's exactly what I was going to. The grief part of that, sort of the potential for increasing dilution and depth is what I'm watching out for basically here. Do you know more about that right now, or is that something you will know more about in the future?
I think that's all part of, as you're drilling, you encounter these things and they come in. But the Lamprey's are, our widest Lamprey at surface is about 5 or 6 meters. The Lamprey dike that we hit at depth is meter scale. So those really aren't going to impact the overall mine economics at all.
Right. But how has the presence then of the Lamprey's or the VG or any of the stuff that you're observing here in this whole 58, how has that changed your drill targeting approach so far?
It really hasn't. We are seeing, an association of those Lamprey's sometimes with higher grade. So obviously we want to pay attention to that. But really our drill targeting is focused on following that intrusion. The intrusion, we do get mineralization in the sediments as well. But the best mineralization is definitely within those intrusive rocks. So it's really a matter of modeling that intrusion at depth and to the south and the north, and just keep drilling from hole to hole as we understand the kind of geometry of that intrusion.
Okay, fair point. Seems like there's going to be a whole lot more to talk about after the summer too. Are you, in the meantime, are you also doing any more met work, given the I know you've done some, and I know you want to raise that recovery, but why I'm asking this specifically is because of the arsenopyrite and bismuth that is coming up with this whole 58. So are you doing any more met work specifically because of that?
Not specifically because of that, but definitely we will do more metallurgical work. We've been talking about that. We did that initial bottle roll testing that really just demonstrates this is a typical intrusion related system, just like Victoria Gold or Fort Knox, and you expect that you'll be able to use, heap leaching technology or the technology that's been at those other mines. So no big red flag there. Typically in these systems, and ours included, you see very low amounts of sulfide, so arsenopyrite, pyrite, all those things. And although we do see the odd, like we included a core photo where you see this nice little arsenopyrite vein, the gold is not tied up in those, and the overall amount of sulfide in the system is still trace. I'd almost call it trace.
Okay.
But the interesting thing metallurgical wise is, when we're starting to encounter higher grade material like we are in the blackjack, I mentioned that 55 meters of over 3 grams. We've got 2-gram material right at surface, hole 24 hit a sub-interval of better than 2 grams. We have a bunch of holes like that. So there's a higher grade component to the blackjack. That's why overall it's a higher grade deposit. So it's prudent to really start looking at, well, what's the best method to recover gold? And you have to, as you get down the road and into your economic studies, you're going to want to have the data to say, well, is heap leaching just a common everyday heap leach operation going to be the best way to go and return the best economics? Or is there a sub portion that you may process by vat leaching or a mill? So, you have to do the metallurgical work to have those numbers. So yeah, we're definitely planning on gathering some more material to do, more detailed metallurgical studies.
Good. This does give me an overview of where you think this is going over this year. A point though on what you just said about Fort Knox and Victoria, I also oftentimes see you being compared to Snowline because of the style of mineralization here, that being the intrusive. And again, I barely know what I'm talking about, but that doesn't seem like an easy comparison to make, specifically because of the size. Or you could also think about this, like if someone's listening, not geologically inclined, and they're thinking, oh, is this a promotion tool? I mean, you're comparing yourself to the biggest explorer here in in the region. So talk to me about how you'd compare the geological footprint of those systems in terms of other stuff besides the intrusive alone, like structural controls, alteration systems, lithological settings, and so on and so forth.
Well, I think the bottom line really is, you got to focus on the intrusive system. And so all these, as when I say Fort Knox and RC Gold and Victoria Gold and Snowline, all in one sentence, that's because every one of those deposits are hosted within a tombstone suite intrusion. So this is a belt of intrusions that stretches across Yukon and Alaska, and they're the same age, around 93 million years old, vary by about a million years or so. So I can take a rock from Fort Knox and Victoria Gold and from Snowline and our deposits and put them beside each other, mix them up, and you wouldn't be able to tell which is from where. So they have a really common history. And, when Fort Knox was discovered back in the 1980s, it was Robert Friedland's company. He had a private company, H6000. I worked for the government back then. So they recognized, this discovery in Alaska had big implications because this belt of rocks stretched, in Alaska, then it hit the Tintina Fault, offset 480 kilometers, and carried on through the Yukon. So they mounted a program where they went and they looked at Clear Creek, they looked at Dublin Gulch, which is Victoria Gold's property. They went across the whole Yukon, acquired a bunch of ground, did a bunch of more work, and really started focusing attention on this belt of rocks. So, a lot of times companies are always looking for a proper comparison of deposit types. And when you're talking about these reduced intrusion related gold systems within the Tintina, belt or the Tombstone Gold Belt, it's a really, really solid geological comparison. Been a lot of research done, and that's the bottom line. So a lot of these intrusions are gold bearing. And that's why we can compare them, and say they have the same potential for that type of size.
So where I'm coming from with this is because I like geological comparisons because it helps me wrap my head around where this thing could go. There's oftentimes a lot of geological variables, though, in between, as I said, the alteration system or lithological setting and so on and so forth. But it's an interesting point that you make, that if you put all those rocks next to each other, a geologist maybe wouldn't be able to tell a difference. I definitely wouldn't. But it's that's a good point that you brought up there. Because then essentially it comes down to size. It comes down to, you need to drill this more, follow it up, and sort of close it off because mineralization for now remains open. So is that the thing that it comes down to, about basically size?
Yeah. Yeah.
Okay.
Yeah, definitely. I mean, once you're on to one of these systems that is gold bearing, then it's really a matter of defining it. And, another really interesting thing is, because these things are all the same age, they were placed into the crust at a common, time in the Earth's history when tectonic forces were aligned. So, the controls on mineralization, like the veining that we see in our deposits, they run a common direction, east-west, steeply dipping. You go over to Victoria Gold, the little veins within that intrusion, they trend east-west, they're steeply dipping. So you see some striking commonalities between these things. So really, we have a very good understanding of these deposits and where the gold is hosted. It's just a matter of really defining them by that drilling. And, sometimes like for instance, the Eiger intrusion that hosts the Eiger deposit, we've just drilled along the margin of it. We haven't got back there to do the resource expansion there. But in the central part of that intrusion, there's been prospecting that has found gold samples, in the multi-gram range. So there might be areas within that intrusion that are barren, and also other areas, obviously, that are gold bearing and host this mineralization. So even within, individual intrusions, there might be different controls within them to allow that gold bearing fluids to come up and in place in them.
Why do you think then, if the similarities are as striking, and I'm looking at the presentation that you have on your website, where you have the comparisons of, you have Snowline, you have Victoria Gold, Banyan, Sitka, and then you say, Snowline doesn't have the power in the road, you guys do. Then you have a bunch of other stuff that you compare yourself to. But like the second line there is very, I mean, it's interesting. The difference in market cap is very interesting, right? Because you're in, this is a bit older, so you're now at 55 million, they're at 800 million. But like, why is the market not giving you any value for those similarities, or not as much value for those similarities as you would like?
I think they're starting to, but I mean, Snowline, let's face it, Snowline really has changed the narrative. Like even with the discovery of Fort Knox and Eagle Gold Mine and the other known kind of intrusion-related gold deposits within the Tombstone Gold Belt, the typical grade has been that sub-gram, half a gram to 0.6 grams. You look at Fort Knox, their initial grades were just under a gram. They're mining 0.3 grams now. Incredible. But, the whole narrative was these are big gold deposits that are sub-gram. Snowline has changed that whole narrative because their overall grade, people have put it out, it's much better than a gram, between a gram and 2 grams. And so, even research-wise, even, my chats with Craig Hart, who we're good buddies as well. We worked together for years and he's on our advisory board. So we're always in contact. And just, one of Craig's points was nature only likes to work in straight lines. So if you take, your lowest grade, tombstone related intrusion hosted gold deposit down here in the corner, and then you put Snowline up in the corner, that's the highest grade one discovered to date, everything's going to fall along that line. And so, the bulk of deposits have been, in that sub-gram range. Snowline changed the narrative. People, Sitka's been kind of working away in the background. Sitka's a great discovery as well. But people haven't really recognized that we're hitting, better than those average grades as well, especially in the blackjack zone. So I think once the sheer joy of this fantastic discovery that Snowline's made, it's a beautiful discovery. It's a beautiful deposit. But now people are using the knowledge gained from that and going, well, geez, this whole belt of rocks has a whole new potential and we need to relook at it. And then they went, oh, who are these Sitka guys? Jesus, look at what they've been finding, right? And we haven't hit the nice big intrusion like they have, that they're stepping out and hitting these consistent big grades. We've hit a smaller intrusion that we're drilling and hitting nice, consistent higher grades in it. And we have a lot of underexplored potential on the rest of our property. So we're on to a higher grade system as well. We just don't have it sticking out of the ground like snowline, but every project has its advantages and disadvantages. And a big advantage we have is our location for sure.
Yeah, that's a power and road that you mentioned there. You being between Dawson and Mayo, it's a big thing. It's the same for Banyan. Banyan is also close. I spoke to Tara not too long ago. So no, it's yeah, it is definitely giving me a better idea of what's happening at RC. What else is happening in the meantime? Where are you going to the US this year, or is that not something on the planning?
Yeah, well, we've been, quietly advancing our Alpha Gold project in Nevada. It's only 40 kilometers south of the Cortez Hills mine complex, so it's in elephant country. And that's an interesting one. When I did work for the Yukon Geological Survey, of course, Attack Resources found the Carlin-style mineralization in the Yukon. So we were pretty active in going down and looking at that Nevada geology. Did a number of trips down there. In fact, visited Cortez Hills, so it was pretty interesting. But we have a Nevada-based geologist that has worked there for many, many years, understands the geology, and he's the guy that brought this project to Sitka Gold. And he said there's under-recognized potential. He had a different interpretation of the geology, brought it to Sitka Gold. Sitka started drilling it back in 2020 with just a number of small drill programs, and it did prove up that the equivalent host rocks to Cortez Hills to the north existed on the Alpha Gold property. Started drilling them, drilled the upper part of the stratigraphy. There's two, again, I know enough Nevada geology to be dangerous. There's two kind of main carbonate host horizons in the Cortez trend there that host the bulk of mineralization in the deposits. One is the Horse Canyon equivalent. It's the shallower of the two. Then there's the Wenban 5 that's deeper. Wenban 5 is the main ore host to Gold Rush and some of these other big deposits. We've just drilled that upper stratigraphy. It's undercover. It's shallow, but it's still undercover, and wanted to prove that the right lithology was there, the right structure, the right, folding, all that geometry was there to host a Carlin style deposit. And we proved that. And also the drilling has hit alteration and gold mineralization. So every drill hole has hit gold mineralization, nothing, equivalent to Gold Rush. Otherwise we'd have a different conversation here, but it's proven that there's a mineralized system there. And the drilling that we've done has really helped us refine the geological model and potentially start to develop a target to drill that Wenban 5 equivalent rocks that are deeper. So we're looking at our next steps and what to do there, whether it's us or somebody who's kicking tires, or I think we've proven that there's a Carlin style or Carlin type system there, and it deserves more work. So we've set aside a little bit of a budget. If we do some drilling, we could easily get in there, spend $500,000 and progress the project a little further, and maybe get lucky and hit something really spectacular there, because the prize is pretty big, as we all know, with some of the discoveries in that belt of rocks in Nevada.
Yeah, it could be. It could also be elusive, though. Carlin type deposits have, hurt not many companies over the years, so they could be elusive. But so where I'm coming from with this is I'm thinking clearly it's not better than what you have at RC. It's not as high priority as what you have at RC. So why even bother having that on the balance sheet? Like, why not start actively looking for an options partner or someone who just buys it right off you so that you can put all that money, time, and effort into RC?
Yeah, I mean, we're always looking at those options that you just said, right? We're always looking, how do we create shareholder value? So whether that's optioning it off or selling or whatever, we're open to all those things. In the meantime, though, when you have a project, and I hear you on the Nevada ones, you can really go down a wormhole on chasing Carlin style deposits. But you also have to, as geologists, you want to add value to your project and make it marketable, right? If we didn't do any drilling there, it'd just be another story that, gee, there might be a Carlin deposit under these rocks here, right? So, you do have to take it to a certain point, and we're always evaluating that. RC is definitely our focus, so we're not about to shift and spend the bank on Nevada, but we do look at it critically on how we can still, enhance the shareholder value. And what we're doing, leads into people looking at us, looking at our project, kicking our tires and following us, and potentially opens up the door to option agreements, sales, whatever. So yeah, we're always looking at those ideas.
Are Burrow and Coppermine, are they in the mix of looking for new ideas as well, or is that something you'd like to keep?
Well, interesting point. When Burrow Creek was kind of the main focus of the company back in the day, prior to the discovery at RC Gold. So obviously the attention is focused. But in the meantime, Burrow Creek, it's taken about 3 years. People blame everything on COVID. So it's taken 3 years for us to get our drilling permit to drill off of our patented claims and look at the extension of the Burrow vein onto BLM lands. So, kind of when it rains, it pours. We just received that permit, a month or a couple months ago. So now work to, enhance Burrow Creek with a fairly limited, simple drill program. We're able to do that. So we're kind of looking at that with the same ideas. How can we enhance shareholder value? Do we do this drilling ourselves? Do we, try and market it? Again, any of our projects, every company out there is being looked at. So there's people looking at our projects, and whether we advance that ourselves with a little bit more work, or have somebody else come in, that's kind of to be determined. But again, for Burrow Creek, if we just threw a $500,000 budget together, we could, do a fairly simple drill program there efficiently and, show the extension of that vein.
Well, you're mentioning a couple of $500,000 budgets here and there, but unfortunately for me, money doesn't grow on trees either. How much money do you have left right now in the treasury?
Yeah, we've got $6.5 million, and that's about half flow through and half hard dollars. So the US stuff would be hard dollars, and we've got plenty of those. Obviously, the bulk is at RC Gold. And yeah, you mentioned Coppermine. That's another one. That's why I said when it rains, it pours. We've been waiting for a drill permit on the Coppermine River project as well. That's up in Nunavut, close to the Kugluktuk, which used to be called Coppermine, obviously. It's only 40 kilometers from Tidewater. It received its permit. Excuse me, I'll have a drink here. I wish it was Yukon Brewing beer, but if you haven't had some, there's a plug for my friends in the Yukon. I ask around the world if they have Yukon Brewing beer, and they always say no. And I tell them it's a big mistake. But anyways, the Coppermine River project, it just received its drilling permit as well. And it's a really interesting property, never been drilled, new discovery, potential of sediment-hosted copper. There's some great assays on surface, a little bit of geophysics. So, we could potentially do a small drill program up there. Again, never been drilled, so it's a geological target with some great surface samples, copper and silver. So yeah, those are all things we're looking at.
For the $6.5 million that you have right now, that's going to be enough to finish this drill program, the med testing, and I assume cover G&A until the end of the year, right?
Yep.
Okay. Well, there's
Yep.
as I mentioned at the beginning, I was looking at the expense sheet with your last financial numbers, and there was no paychecks on there, so the G&A came out rather low. What's happening there?
Yeah, I mean, we've been using contractors. I think the only person on payroll is Core, our CEO. Then at the end of last year, like previously, we've been using contract geologists, but we hired a full-time geologist, Joe, as our project geologist. Used to be VP exploration for Fireweed Metals, so he's come on board with us. So he's on the payroll as well. But typically, most of us we're not on the payroll. We just charge our time for contracting when we're working for the company. So yeah, that's how we keep our expenses low. We just have I wouldn't call it an office. It's more of a room shared with lots of other outfits in Vancouver. So we have a bit of an office there. There's a kind of an office building or a floor in a building that has a number of junior mining companies that share the space. So we keep costs low that way.
Hmm. Uh, Before this, I was kind of worried. I was like, okay, Mike is going to come on. He's going to be pissed because he's not getting paid at all. So why is he even speaking to me? So I thought that might be the case, but I'm happy you're getting paid. Um, okay. So yeah, that about explains it. At what stage do you think M&A will start ramping up in the Yukon, or will begin in the Yukon? I mean, this guy, like, you have Banyan, you have you guys, there's Victoria, there's obvious similarities between these things, and there could be an argument for this all being one company, or at least fewer companies than what we have right now.
Oh, I agree totally. I think, when you look, that's that one slide in our presentation online where we show that Dawson Ameo region. It's got better infrastructure because it's seen placer mining for over 100 years. So there's lots of secondary roads going in there. There's been exploration, obviously, following up on the gold in the creeks. So it's a little more advanced, and there's very few property owners in there. It's Victoria Gold is the big one with their mine. They just acquired the Sabre Gold's projects, including Brewery Creek, Sheelite Dome. Then there's Banyan. Then there's us. So a consolidation would be a very easy thing for somebody to do. And being, a stable North American jurisdiction, I would think it's on a lot of people's radar screens. And if it's not, it should be.
Hmm. Yeah.
And it's just been a really tough time. And I think people are suggesting that mergers and acquisitions is a big part of the next year or two here, especially as we see a strengthening gold market. So it makes a lot of sense to kind of look at an area like this and be able to evaluate it and advance it at a reasonable pace. So I hope people are looking hard at it.
Who do you think those people are? I think that might also be an important question.
Well, there's a number of majors that work, worldwide that are Canadian companies that don't have solid Canadian assets. So, obviously B2 Gold, right, is invested in Snowline. So they're paying attention. Other majors that are involved in the Yukon, but not necessarily in the Tombstone Belt, over in White Gold, Agnico Eagle and Kinross, own part of the White Gold project and that company. So, who knows who's looking at the coffee project that Newmont is getting rid of, right? That's on
Yep.
the selling block. So I would think has a lot of gold producers out there, maybe mid-tiers or earlier stage ones that have a focus on the Yukon and are, they might be looking at coffee right now, but there's only going to be one company that's going to buy that project. So I hope they're paying attention to what else is going on in the Yukon. I imagine they are, right? You do that due diligence on a good project like coffee. It's a great project. And they're going to look at, the jurisdiction, the infrastructure, the power requirements, all those kind of things that will actually apply to looking at companies like us or Banyan or Victoria Gold. So there's a lot of homework being done right now in the Yukon, and hopefully that spills over and bears fruit.
There's a couple of interesting spots in Canada like that. I think not many like the Yukon in a way that it's become in the last couple of years with Fireweed and Soline and a bunch of you guys up there. So it'd definitely be interesting to see where that goes. And I think I'm mostly out of questions here, Mike. What am I? Yeah, and it really seems to know your rocks, like because you. Why, by the way, are you VP of Corp Dev given your geological background here? Like, why that role?
Uh, I don't know. No, I do know. Core asked me to join the company a couple years ago. I really wasn't interested in being the VP of exploration and getting out there and doing that part of it. In my role, I worked 20 years for the Yukon Geological Survey. So I'm super familiar with Yukon geology. Part of my role in that was, visiting virtually every active project in the Yukon, and then not only letting the Yukon government know what's going on and keeping them informed on the potential future of mining and different projects in the Yukon, but going out to conferences and being the promoter for the Yukon and letting folks know what's going on. So that was a big part of my role, was going around up to Toronto, traveling overseas, and really letting people know what's going on. And Core liked what I did there. We met many years. We met in the mid-90s when he was doing mineral exploration in the Yukon on another intrusion-related gold deposit. So we've known each other for well over 20, 25 years. So he saw a niche for me to come in there. My role with the government, I met just about everybody. So I'm lucky. I have good connections in the industry. I'm not afraid of standing in front of a podium and talking to a bunch of people. So yeah, it fits well into my other skill set. But we're a small company. I mean, just yesterday we had a technical meeting, and you had, the CEO who's a geologist. You had the president, Don Penner, who's a geologist. You had the VP of corporate development, Mike Berkey, who's a geologist. We had our newest director that joined the board when we moved from the CSC to the TSX Venture. Angus Campbell used to be the VP exploration with Sabina Gold and Silver. He joined in. So, a technical focused meeting with a really experienced focused group of geologists that have different roles in the company, but when it comes to figuring out geology, nobody's missing that call, right? So it's a real strength of Sitka, that technical background, and then of course Core has a good financial background and all that stuff. He can do the CEO role, so it's a great group.
Yeah. Well, it's a very good overview. I'm kind of disappointed when you said that you worked at the Yukon Geological Survey, because now I realize that's the government job you were referring to. I thought this was some kind of a CIA geologist that you were talking about. I thought it was going to be more interesting. But you wouldn't tell me if that was the case anyway, so I don't know if I should.
Well, I got a great briefing once from CSIS before going to China on a trip, which was really, really interesting. But that's a story for another day. But I have a CSIS pin. I never know whether to wear that when I'm traveling through security or not.
Yeah, you
I don't
should.
know if that'll get me through quicker or slower. I haven't tested it yet.
All right. Well, it's enough chit chatting, Mike. I'll start wasting your time if I keep going. I could keep going for hours though. This has been fun. And I'm sure you have better uses for your time though. But again, this was actually fun, and I hope you'll be back on soon. In the meantime, though, I'm going to be taking yet another trip down south. I'm going to Arizona and Nevada in the U.S., where I'll be talking to Derek McPherson. He's the CEO of Gold 79 Mines, a gold and silver exploration company. Company's listed under the ticker symbol AUU on the TSXV. In Canada, we're an average of about 10,000 shares trade each day. with a that would be the post-share consolidation 52-week high of 40 cents and a 52-week low of about 20 cents, with a market cap somewhere between $4 and $5 million, call it $4.5 million, and about 19 million shares outstanding. Today, this is a 22-cent stock. There are about 5.4 million warrants as well as 1.1 million options, which brings us to about 25.6 million fully diluted shares. About a fifth, so that'd be 20% of the company, give or take, is in the hands of management and directors. Institutions own 10.9% of it, and Kinross Gold Corp owns about 5% as well, leaving call it 65% in the hands of retail investors. Looking at the last interim financial statement, which is dated September 30, the company had $100,000 in current assets, about half of which, so that would have been about $50,000 in actual cash, and then the rest was receivables and prepaid expenses on top of that. The balance sheet shows me that there is no long-term debt, and there is about $140,000 in current liabilities in the form of account payable. So that same statement tells me that Gold 79 spent on average over the last 9 reported months about $35,000 per month on what I would call G&A, or you can call it corporate expense. That'd be marketing, travel, payroll, and all the rest included. But it is currently time for TSXV companies to do their official filings. So you want to pay attention to the new numbers as well by the time you're listening to it, if it is after the end of April. As to the project expenses, they spent about $500,000 for that full 9-month period, making the average exploration cost $56,000 per month, most of which was spent on permitting, which is something I hope we can talk about later on. This means G&A represented about 38% of the spend, and the exploration to G&A ratio was at around 1.5 at the time. Same old though, as it always is. As I said, this is only a snapshot of a 9-month period, so please do head over to the company's website as well as setterplus.ca to look at the most up-to-date financial numbers, and don't ever blindly trust talking heads on the internet. Also, because, by the way, Gold 79 just announced a $1 million financing about 2 weeks ago. Boring stuff aside, though, there are 3 projects that geologically are basically in the same place, but technically we humans decided to divide those into 2 states. So there are 2 projects in Nevada, that being the Tip Top and Jefferson Canyon, and then there's 1 project in Arizona, that being the Gold Chain. I say all 3 are geologically in the same neighborhood because they're all on the Walker Lane Gold Trend, which is an epithermal gold-silver belt set in relatively young rocks from between 25 to 12 million years old. For this company specifically, Gold 79, Gold Chain is the main focus right now. This is supposed to be a low sulfidation gold system that lies at the southern end of the Walker Lane Gold Trend in that will be northwestern Arizona, with multiple past and currently producing mines in the area as well. The main target of interest here is Tyro, which is a vein system. It's 3.4 kilometers long, and it's specifically highlighted by a 1 kilometer long main zone, with the target grade here being 1.5 to 2.5 grams of gold per ton, which is what's basically a guess, but it's an educated guess based on historic exploration and a bunch of other work that the company has done. This is mainly a priority target because Gold 79 believes a resource can be published on this target rather quickly after doing 1,250 meters of core drilling and 2,500 meters of RC drilling to shallow depth, so not as deep. 150 meters average depth is expected here, but Gold Chain is bigger than just 1 target, so I expect this to be kind of the focus of the discussion today, but it's not the only thing that we'll be talking about here, because there's also Jefferson Canyon, which is very interesting. This project has seen 145 holes drilled into it historically. Gold 79 is using those for targeting, and one of those holes, so GJ81, has returned an over 260 gram meter hole, being over 41 meters of 6.4 grams per ton gold. And this is also the project, by the way, that got Kinross involved in the company. Kinross has an option to acquire 70% of this project for a $5 million payment and a bunch of other things, and then form a joint venture with Gold 79. And then they also have another option to buy an additional 10% of the project for an additional $5 million if they so please. But before that, a couple of things will have to occur, including a maiden drill program. But that's really only going to come after hopefully receiving a drill permit, which has now been long awaited since 2021. Again, something we will be talking about later on. And then there's Tip Top, as I said, that's the other project in Nevada. also a low sulfidation epithermal gold silver system. Obviously, this is early stage, that or target at least. This is early stage. There is some, but limited historical work that's being done on the project, and I think I kind of think of this mostly as a rather large golden soil geochemical anomaly that is over 5 kilometers long, which could give it a lot of potential, but again, not without more time and not without more money, of course, which is also why the company is currently looking for strategic options for this project. Again, hopefully something we can talk about later on. And well, this actually might be a good point for me to shut up, Derek, and ask you a little bit about money here, because you're raising about $1 million right now. And I suppose twofold question that's going to result in a long answer. First of all, how are you finding the financing climate? How's raising money right now, and what exactly is that money going to be spent on?
Yeah, okay. So let's start with the climate. While the gold price has been absolutely on fire, and there seems to be some positive sentiment in the sector, and we've seen share prices perk up a bit, but not really materially, not reflective of the gold price run, which is an interesting conversation in itself. But from an investor point of view, you're sort of your typical retail investor that we've gone to and worked with to fund the company in the past. There's a lot of people that are share rich and cash poor at the moment, as you might expect. While we are seeing, M&A hasn't, the movement in share prices hasn't really moved itself down to sort of our neck of the woods or down into the size that Gold 79's in. However, there is interest out there, and there are people that are looking ahead, seeing that with gold at $2,400, you've got mid-tiers and majors and even junior producers that are minting cash at the moment. And we're already seeing there's been a massive uptick in M&A activity. And I think that's a direct consequence of that uptick in the gold price. However, that M&A is focused a little bit above where we are, but I think it's coming down there, and I think we're seeing people that are interested in participating. For us, we've announced a raise at 25 cents with a half warrant at 30 cents for 2 years. Financing, our use of proceeds on that financing is basically twofold. First and foremost is the first step for us is actually a trenching program. One of the things that, as you mentioned in your talking about Tyro Main Zone and the fact that we think we can get to a resource really quickly, one of the big risks in our educated guess on that exploration target is consistency of grade across the Tyro Main Zone. Low sulfidation epithermal systems can be less consistent. And so what we're going to do is initiate a trenching program. And that trenching program is a 1,000-meter trenching program. So this isn't your typical, we're going to expose some rock and take a couple cuts. This is a systematic trenching program across the whole width or whole length of the Tyro deposit and across the width of the 20 to 40 meter wide vein that sticks out at the surface. And the idea there being to really give ourselves effectively what works out to, equivalent to flat drill holes from a resource perspective across the surface. And really our objective there is prove that consistent grade. Because that will determine how much drilling we actually need. As you noted, we've only got about 4,000, slightly less than 4,000 meters of drilling sort of budgeted to get to a resource. And then with that, following that, we'll be able to follow up with a select diamond drill program. To date, all the drilling on the project's been RC. And the diamond drilling program is going to target sort of 4 key things. One, it's going to be across the Tyro Main Zone where we've had some good hits. Our last program was 44 meters to 2 grams gold. Into the high grade zone that we hit the last hole of our 2023 program, we hit 9 meters at 51 grams there. It's a structurally complex area. We need the core from that area to understand what's going on. We want to test a couple of deeper holes. While we are only talking about putting a resource in down to 150 meters, systems in this camp historically have 1,000 feet of vertical productivity, so about 300 meters. So our intention is to drill a couple of deeper holes and demonstrate that deeper. And then we want to do one big step out hole, or 1 or 2 big step out holes. And so, as you noted, the Tyro Main Zone is 1 kilometer long, and that's where our exploration target is, but is a 3.5 kilometer, almost 3.5 kilometer vein system. And we have access. We've updated our permits at Gold Chain so that we have access to the Sunset vein, which is would be about a kilometer and a half step out from from our furthest south drill hole at Tyro Main Zone. And we take a couple shots there and start to see if we can prove that this system is as big as we think it is.
For the financing, when I'm asking about the climate, I was specifically wondering about how you are finding raising capital right now for this specific raise? Because it is, well, the
Okay.
price is today falling below your offer price, I believe, on that offering. Sure, there's a warrant with that. It's a non-broker private placement. So maybe talking about that, like, well, first of all, why non-brokered? I'm not complaining, by the way. I obviously don't like bought deals and stuff like that. But why is this a strategic move that you specifically want to basically craft the shareholder base? Is it relationship based on something else? Like why this move?
Well, non-brokered, I mean, there's two things with brokered or non-brokered private placements that I think most investors probably don't understand. Is that as soon as you do a brokered private placement, there's an additional $30,000 to $50,000 in cost. And so what happens is that when you do a brokered private placement, the broker's legal team has to do due diligence, and the corporation has to pay for that. So you add $30,000 to $50,000 in costs. And so if you think about, typical private placement, you pay 7% cash fees already. So now all of a sudden you're raising $2 million. Besides, if you're raising $2 million as an example, or $1 million in our case, that's $70,000 in fees. Plus then you're adding $30,000 to $50,000 in additional legals. And so basically from that perspective, it under a certain size, a broker private placement generally doesn't make sense, because your cost of it escalates your cost of capital pretty quickly. So that's, I mean, if you really want to get down to it, that's the main reason for a non-broker private placement. I think that at some point we will do that as we get into larger, and usually the tipping point's around $3 million roughly is the number where it starts to make sense.
Okay, what kind of investors are you looking to get into this? Obviously, I assume it's long term, but what are you looking for them? Is this U.S. investors, Canadians, Europeans? What are you looking for?
If I look at the book now as we've progressed through, it's a little bit of everything. We've got investors basically targeting high net worth investors that invest in junior mining stocks. Because we are a small company, there's a limit to what institutions can do. And so the consequence is that we're mostly targeting high net worth retail investors. But you know what? Those tend to be the stickiest money. Those high net worth investors tend to have longer investment horizons, and so from that perspective, it's certainly it's positive for the company and the share and the existing shareholder base.
Do you have an idea of how many people we're talking about, like how many new names we're introducing to this? What I'm trying to understand here basically is what happens in 4 months and a day, and whether those are actually going to be sticky.
I think that for the most part, I would say that probably half to three-quarters of the book right now is people that are existing shareholders, and then there's management's about 25% of the book right now itself. And then there's probably another half to three-quarters is existing investors, so people that have supported us all along. And then the balance will be new investors.
Okay. And then when and if you get that $1 million, you told me what you're gonna do with it on Tyro. What percentage of the money of all the money do you think is gonna go into Tyro actually?
With the drilling program, everything that the budget for the actual exploration program that we've outlined is probably about $600,000, $600,000 or $700,000 Canadian. Obviously, there is for our company in particular, and we outlined it in the last slide of our deck. There are property payments that come due for us every year across different parts of Gold Chain and at Tip Top. Some of that money is going to go into that. Additionally, with U.S. projects, there's a BLM fee, which is $170 claim. So that's if you look at our package, that's for Gold Chain in particular, that's $25,000 to $30,000. Or sorry, it's almost $40,000 US that has to be paid to the government. So the government of the US. So that's the majority of the use of proceeds.
Okay, so the strategy here would be get a couple of holes, do some work on it, remind the market that there's, I was going to say show the market that there's something there, but you already know that there's something there. Maybe the market has just kind of forgotten because of the permitting situation, which I also want to talk about. But so strategy, go there, show the market that there's, remind the market that there's something there. And then on the back of that, hopefully at a higher price, do another capital raise. Is that sort of the plan?
That would be the requirement. Yeah,
Good.
And hopefully what we will get from this, there was some method to the madness in the pricing of the warrants. These warrants are priced at 30 cents, again, which is a pretty tight number to 25-cent offer price. The hope is that, or the plan is that, if we're getting love from the market, our cost of capital comes down, but those shares are already out there with these warrants would come in.
Half warrant though, right?
It is a half warrant, yeah.
Yeah, sure. Okay. You just mentioned something about the permits on Tyro, and I do want to talk about Jefferson Creek and those permits there. What exactly is the permitting situation with the BLM, local folks, local fishers, and local bird? I don't know if there's fishes in the desert, but local birds and everybody else there.
I'm sure
what's the
there's an
situation?
NGO that could find them. So with Gold Chain in Arizona, so the important thing about Gold Chain and the one advantage it has versus particularly Jefferson Canyon is that it's the main targets are actually on patented ground. So all the targets we're going to trench. Actually, we couldn't do the trenching program we've outlined if it wasn't on patented ground. And so patent is the equivalent of private land. These are claims that were deeded mining titles effectively around the turn of the century. The U.S. doesn't really do this anymore. And those deeded mining titles are ours. And so we can do pretty close to everything but build a mine on them. And so we don't need additional permits to drill. We don't need additional permits to go to this trenching program. We do have the surrounding claims around the patents are BLM. And we have what is called a notice of intent with the BLM. That allows us up to 5 acres of disturbance, including road construction. So I did mention that we did amend our permits. BLM's been BLM out of the Kingman office in Arizona has been very good to work with for us. We amended our notice of intent to include a road to get access to the Sunset Vein for that hole that I want to drill to demonstrate strike length. We've also permitted a couple of other spots off the claims for targets that we might want to drill in the future. They're not priority relative to what we're doing in the Tyro main zone. But I think that flexibility has given us an opportunity. So we're in good standing there. They're very good to deal with as far as work goes.
I'm asking in that manner because what's happening with what your outer asset again, Jefferson Canyon, the Kinross joint venture, right? It's like the U.S. is often considered or brought up as a safe jurisdiction because nobody's going to come in and steal your asset or anything else like that, or at least not all at once. But you've been waiting for this permit for multiple years now, right? I'd argue it's also hurt the stock in the process. It maybe dried up a little bit of the interest. That's why I said remind the market that there's something there at the other project. And well, this has also increased your cost of capital, and so the dilution to shareholders has been greater than what it could have been if you'd gotten the permit the first time around. So talk to me a little bit more in depth about why this went down like it did and how that permitting is going now, as well as it's just about the permitting risk in the future as a whole across all 3 of your projects.
Yeah, I think just maybe just to step back at a high level, I think the trade-off that you get, and every mining jurisdiction has its own specific challenges, right? The trade-off that you get in the U.S., which is security of asset, right? You're going to invest capital, and if the government wants to take it away from you, they generally have to pay you to do that, which has actually happened in the U.S. However, the flip side of that is that it takes time, and time can be as big a killer for a junior mining company as having your asset expropriated, unfortunately, because of dilution and costs, etc. For Jefferson Canyon, I guess there's sort of in the Western U.S. there's sort of really there's 4 types of land, right? There's patents, which are deeded mining titles. There's private land, which may or may not have the binding rights attached. There's BLM ground, which is where Gold Chain is, and BLM is the Bureau of Land Management. It's a federally regulated agency. And then there's the U.S. Forest Service, which is a federally regulated agency. The big difference between and you're allowed to explore for minerals on the U.S. Forest Service ground and on BLM ground. You stake the ground, you're allowed to explore for it, and there are many mines built on both sets of ground. The main difference between Forest Service ground and BLM ground is when you want to do a notice of intent. So you want to do that initial 5-acre drill program. So with Jefferson Canyon, so the difference is at at Gold Chain, we don't require to do any studies ahead of that initial 5 acres of disturbance for BLM ground. On U.S. Forest Service ground, you are required to do studies. So we had to do a survey, a biological survey and a cultural survey. The results of that, coupled with our exploration plan, is then reviewed by the Forest Service, and then that goes into the process of granting the permits to make sure that you're not disturbing anything for your notice of intent. So the consequence of that on Forest Service ground is that your initial drill permits that took us a few months to get at Gold Chain, now take 12 to 18 months at a minimum. Now, in Jefferson, in particular for us, a couple of things happened. First, when Forest Service offices, while it is a federally regulated agency, each local area manages their own ground. There's a forest ranger who manages the ground for Forest Service, the Forest Service in around Tonopah, and his team is the one who reviews our application. When we completed our biological and cultural surveys, there was not an archaeologist or biologist on staff at the local Forest Service office, and they didn't have the ability to access resources. And so that created an initial delay. That delay took 6 to 8 months, added 6 to 8 months of time on its own. Then, by the time they did start reviewing it, what they came back to us with was that our proposed disturbance was going to impact some of these cultural areas. And I want to be clear, what is defined as a cultural area is Jefferson Canyon is a turn of the century mining area. There were people that operated mines in the 1910s and 1920s. And what is considered cultural there is the remains of that work. It's a couple of stone buildings and a few things like that. However, because our disturbance was going to potentially impact these sites, they wanted us to move. And, you know, if we're not building a mine, we don't want to disturb them. So at this stage, the plan is not to. And so the result of that, and there's an area around it, but the Forest Service, for regulatory reasons, doesn't release the locations of what they deem to be culturally sensitive sites to the corporation. So we had to redesign our drill program sort of blindly, and sort of guess at where we could and couldn't move it. And so we had to do some work with our consultants, and it was a bit of back and forth process. And that in itself added 6 to 8 months to the process to try and finally get settled. At that point, it was also Kinross involved because we designed the initial drill program. They redesigned it to suit their needs. And then that brought us to sort of late last year when we refiled an updated plan of ops. We think met all the requirements. We've been going back and forth with the Forest Service since the beginning of the year on details within our plan of operations document of things that they wanted to see. You know, where laydown areas, and then what was going to be stored there. You know, if we were going to have a fuel truck on site, what that meant, and a few other things. And so we got through all of that. We've basically gotten through the majority of that process, and now we are we've sort of resubmitted a full set of documents with a plan that is, generally speaking, acceptable based on discussion. And so now it's in the formal review process. So for us, on Jefferson Canyon, there is light at the end of the tunnel. And our expectation is that that Kinross will be able to embark on that initial drill program later this year, probably late summer, early fall.
Would you have had the same expectations if we'd spoken 2 years ago? Would you have expected it to go quicker, or how would you have thought about it?
Yeah, I think when we first embarked on the process in July 2021, so we're now 34 months into the permitting process, I would have told you 12 to 18 months because that's what we were told by very seasoned, experienced consultants. I think the wrinkle of the Forest Service not being staffed, not having the staff to deal with our client is part of it's not something we could have anticipated or would have anticipated. And I think that that's, would have happened. And then once we missed sort of our initial guidance, I kind of expected to be drilling in 2022, to be honest with you, at Jefferson Canyon, late 2022. The fact that, it's going to be late 2024 is surprising. I think if I had to go into it again, I'd be a lot more hesitant to provide guidance until we got well into the process.
How's Kinross dealing with that? Like, how badly do they want to go and drill there, basically? What are they telling you? And has your relationship with them suffered maybe because of this?
I don't think our relationship has suffered at all. I think they're frustrated like we are. They also know that we're doing everything we can to help the process along, just as they are. I think that collectively, that's our frustration. I think, I get a lot of questions. Well, is Kinross still involved? Yeah, they're still actively involved. They're part of the process for the permitting. And they're going to, they want to drill. And they're planning to drill this year. Assuming that, all things considered with the permits. And so I think that while they haven't, directly said it to us, Round Mountain, which is the asset that Jefferson Canyon is next to, is, in their public disclosure, they're talking about end of life at around 2027. Now, my understanding is that Kinross is going to have a long leach cycle on the existing heap leach pads there, because there's some nuggety gold that was put down. So they're going to be running off that infrastructure is going to be there for a while longer after 2027. But I think that there's an eagerness on their part to figure out whether they have an opportunity to have other resources available to them to prolong that mine life. You have to keep in mind that we're not the only agreement that they've done or deal that they've struck in along that valley. And so I think that's also a key element of this for us.
So they're basically just looking for feed for their leach pad after 2027. That's what it comes down to.
Yeah,
okay.
The Round Mountain extends at depth. I think there's some questions of whether it's how economic that is as it goes deeper. So I think there's figure out whether that infrastructure has use beyond 2027, I guess is the answer.
And all the money that would be spent this year, if the permit goes through, they are going to be spending that on Jefferson Canyon.
Yeah. So the way our deal is structured, they have a minimum spend of US $600,000 in exploration. For reference sake, that's about a 2,000-meter drill program, so pretty small. If they overspend on that 600,000, there is not a requirement for that. Doesn't change the terms of our agreement. They can overspend because they want to. If they want an interest in the project, once they've made their financial commitments, including this exploration spend, they don't earn an interest in the project. To earn an interest in the project, it's a US $5 million payment to us to earn an interest. And then if they want to 70%, and if they want to go to 80%, it's another US $5 million, so US 10 in total. Way I like to describe it is a bit of a backstop value to Gold 79 as a whole, because if you look at us, we're 5 million, as you said, $4.5 to $5 million Canadian market cap company, Canadian. And so that's, obviously you've got to discount that for some time. That's not a check that's coming tomorrow. But I think that's provides some backstop value for investors as things progress.
What was the timeline again? When do they have to have it done by?
The option agreement.
Yeah, if they want to.
Yeah, the option agreement is 4 years from the start for when permits are granted. So the time that has not started yet, that was a condition of the agreement.
Okay, I see how they time it, because you say 2027. It was 2023 that they were maybe okay, I get it. Good. Yeah, I appreciate the in-depth overview here. Let's maybe talk about some of the rocks here as well. Maybe start in Arizona specifically with one of your most recent news releases about what you call, again, the Tyro Zone. And you say in that news release that this has the potential to be, 15.6 to 31.2 million tons, I believe, if I have the numbers correctly, of 1.5 to 2.5 grams of gold per ton. It's a range, but it is still rather specific. How'd you come up with that range?
There's a couple of things that drive that range. So we'll talk about the volume first, which is the tons. The basically what we did is we've looked at the average width, both what we see on surface and what we've drilled, average width that we've sampled underground of the existing underground workings, and then along with that the depth extent that we understand, the length that we see exposed on surface, and then the depth the extent that we understand. And so we've that's basically, for rough numbers, that's 20 to 40 meters wide at 1 kilometer long to 300 meters depth. Multiplied by specific gravity. So that gets you that number. And that's, what it is. The 300 meters wide, 1 kilometer at surface is what we've sampled. And you can see that in the long section in our deck. Additionally, the 20 to 40 meters wide, again, that's what we've sampled. It's where we see the results from. It's what we see on surface and what we've replicated in drill holes from at either end of the project. And then the depth extent is the 300 meters of depth extent is based on the productive zone that other mines in the area. So there's a mine not too far from us called the Catherine mine. It had 1,000-foot productive vertical extent. If you look at the Oatman district, a lot of those mines have 1,000-foot vertical extent, and so consequence of that was 300 meters for our numbers. And so that gets you the volume. The second element obviously is grade. So 1.5 to 2.5 grams. That's based on our drilling and our sampling, and what we see and what we understand and what had been mined historically. So.
Okay, fair explanation. What are the structural controls in that vein system, or what are the veins they're associated with? What kind of structural controls?
Yeah, so Tyro is a fault hosted vein system. So there's a structure that is a fault in the Precambrian granite there, and that has been filled with quartz. And that filling of quartz results in a couple of things, and a couple of the images in the deck really show this. But basically you have a brecciated core. So if you look at some of the holes across the Tyro main zone, we get these higher grade zones, 4 to 5 grams over 4 to 5 meters. And then beyond that, we get effectively veinless. And you can see that in chips in drilling, we get less quartz on the outer parts of the deposit where we consider the exploration target to be, versus the inner parts where we get a lot more quartz, which is this breccia zone, which is higher grade. And so hence the grade range, right? If you push the envelope wider, you could get a higher grade zone. And if you push the envelope tighter, you could turn it into a lower grade zone. A higher grade envelope, but a smaller deposit.
Are there any geological comparisons that you can give me to something in the area that I could wrap my head around?
So I guess I mentioned the Catherine mine. This was a mine that was actually produced in the area. It's exactly the same structure, very same, or not same structure, but similar. The Arabian vein to the south of us, which is being explored by Arizona Gold and Silver, they have a fairly large exploration target they put out on their ground. Their market cap's about 5 to 6 times ours. And consequence of part of that is that they're 130 drill holes into their exploration efforts were 28. And then it's also similar if you go down to the Moss mine. Not that it's the best example, but the Moss mine is a fault hosted vein system, and a lot of things in the Oatman district are that as well.
Okay, is that you say this structurally it's the same or similar to that?
Yeah.
Is that the same alteration, same lithology there as well?
The lithology is a little bit different if you go, lithology is always a little bit different everywhere. The Arabian vein would be, the Arabian veins, I want to say 5 kilometers away. So it's almost identical to what we're exploring.
Okay. Well, I'm asking because I'm just thinking about recoveries, so metallurgy and how that's going to work. That's where I'm coming from.
Yeah.
I think you've also done some work on that.
No, we haven't.
Okay.
To the south of us, Arizona Gold and Silver has done. They've had good success. What we could see from what we've in the rocks and we haven't seen any evidence of sulfide. So it's everything points to free gold, which should point to high recoveries, either via heap leach or milling. But, I think that's part of the next exploration program when we do core. Part of that will be to be able to do some early stage metallurgy to confirm what we think is what we surmise from the area.
When you say next drill program, do you mean this, well, before the initial MRE or after that?
Before the initial MRE.
Okay, right. I also assume that Kinross would, not talking about the other project here, but I assume that Kinross would also like to do some metallurgical work relatively quickly, just so they know if they can actually put it on their heap leach pad, right?
My expectation is that there's two. I mean, Jefferson Canyon has 145 drill holes in it, and so it's a bit of a known. There's past metallurgical work that was done on it. There's a pre 43-101 feasibility study that was completed, actually by a predecessor of a predecessor company to Kinross. They just didn't end up with the project in the end. But yes, I think that for them to, I think that what they want to confirm is a couple things for themselves, is that this is, that the drilling, those 145 drill holes that sort of point to something that is Round Mountain-like, i.e. a big low-grade deposit with some very good high-grade kicks, is there. And I think the second is then it will proceed to, have the same lithology and geology as what we have at Round Mountain? Can we process this? Are there going to be differences in recovery, etc.?
Right. Okay. Yeah, I didn't want to divert attention from Tyro here. I was just wondering about that.
Yep.
But that makes sense what you're saying. Within Tyro, within that 1 kilometer highlight that you have there, how do you pick targets specifically? Like where exactly do you put the drill? What angle do you turn it at, and so on and so forth?
Yeah, so I guess there's twofold. Part of that targeting exercise is the trenching program that we're going to do. We want to lay out a pretty deep, that trenching program is going to tell us kind of what we expect where. And then the part of the diamond core drill program will be to prove that occurs, that it continues down. So some of the targets, typically we're going to drill, typically we have drilled east to west. And then when we drill east to west, we drill at an angle across the vein. The vein's a near vertical structure, is our assumption. We probably will drill one hole west to east just to demonstrate that verticality. We have access from both sides. And then, the key, that's in the Tyro main zone. The angle will be a little bit steeper. I think we've generally been about 45 degrees, maybe a little bit steeper in the Tyro main zone. When we get over to the high grade zone where we hit that 9 meters at 51 grams, it's going to be a little bit more better carefully thought out. One of the things that we're going to do, the area around that high grade zone is actually covered with a lot of gravels from the old mining operation. And so as part of this trenching program, we're going to clear up a lot of that area and see what's there. Our estimates suggest that the White Spar Fault, which is the structure that seems to control the high grade zone through the Tyro main zone, isn't near vertical. It's more like a dips at about 70 degrees. And so from that perspective, we're going to need to figure out the angle of approach to best hit sort of both structures and figure it out. And so we'll figure that out with the trenching program.
How long is that gonna take before you can actually go there and drill that trenching program again?
So the trenching program is about a 6 weeks program.
Yes.
It's, as soon as we can mobilize post the close of financing, we will be on the ground there. With Arizona, it gets up to about 120, 130 degrees Fahrenheit in the summer there. It's not ideal conditions to work outside during the day, particularly for trenching, which is heavier work, but also for drilling. If you can't touch the gear, it's kind of it can be dangerous. So our intent is to try and get the trenching program done before the start of summer, before summer really hits in, and then get back to drilling in the fall, mid to late September.
Okay. Well, that basically means May. I mean, you want to get the trenching program done in the month of May, basically. You close the financing by the end of this month, and then you get the trenching program done by the end of May.
That's as of right now, that's the plan.
Okay. Yeah, fair enough. Well, talk to me maybe a little bit about the strategy behind why you even want to push this to a resource already? Like we're seeing a couple of companies out there who don't necessarily do a resource. They get taken out before doing a resource even in the first place. Obviously, they have something internal, but I mean it's a corporate decision, right? So why did you make that decision to actually push for a resource?
I think what you need to keep in mind when you look at that, and whether to do a resource or not do a resource. I guess my view of the world and the way we've approached it is, it really depends on what you're valued at, right, and what your market cap is imputing for a resource. Right now, I think for an exploration program somewhere in the neighborhood of $2.5 million, we think we can put 1 million ounces at 2 grams up. And our $5 million market cap, even if you add in the $2.5 million in additional Canadian spend to get there, 1 million ounces at 2 grams in Arizona is not worth $7.5 million. And so I think that there's value to accrete there.
Sure.
Whereas if you look at some other companies, a great example would be Great Bear, right, is what you're referring to.
Sure.
Their market cap was north of $1 billion. Companies are generally taken out for $100 an ounce. So, you've got to have a 10 million ounce resource to justify your existing market cap. And so why would you lower your cost of capital by putting a resource out? Right? Naturally, whereas I think we can have the opposite effect by raising our cost of capital by putting the resource out.
Yeah, well, that $100 depends on the stage, I assume. I mean, if it's an MRE or is it a PFS?
Oh, absolutely, yeah. There's lots of well, if you look at if you use that $100 an ounce metric for what Kinross paid for Great Bear, it's $100. It's $100 US is generally the rough number. Now,
Yeah.
I'm not saying not all ounces are taken out at that. It's not all are created equal, and certainly not all are that make sense. And you're absolutely right. It really depends where. But I think that it depends what the market's valuing you at, right? If you say, okay, ounces in Arizona are worth $50 an ounce or $30 an ounce, and you say, okay, well, if I put this resource out, how is that going to value me relative to my current market cap, right? That's kind of what we're doing. That's kind of that's why we're approaching it that way. We think at $5 million that we're grossly undervalued for what we have, whereas, if we were trading at $100 million, that might be we might have a different approach on the resource.
Could there be something in the drilling that you see and say, like, okay, what I'm seeing here, let's slow down, like let's push back the MRE because I want to do more drilling, or or you want to wait, or something like that?
I think there's two things. One is, I think if we hit spectacularly out on the Sunset Vein, which is that Tyro extension, I think you would want to be incorporating that into whatever you were working on. I think the second, or you hit something unexpected. If we hit the high grade zone, it turns out is much bigger than we expected, or something along those lines, where probably need to do more core. High grade gold and RC tend not to be great combinations, and so you'd want to do more core in those areas. I think those would be reasons. I guess significant surprise to the upside success wise. I think where that justified that drilling, and then proportionately the cost of capital adjusting to reflect that success as well. And then I guess the second reason that you would say, okay, we need to take a step back, is that this is still exploration, and so if we completely missed, if we drilled into spots where we thought we were going to hit 40 meters at 2 grams or 20 meters at 2 grams, and we hit something at 0.5, that doesn't get us to that end, then I think we would have to take a step back and say, okay, what happened there? Why did that miss? What do we need to do differently? What have we missed in the controls, the structural controls of this system? But I think the more likely, I don't know I hope that if we were going to take a step back, it would be on I guess the answer to the question in the simple way is a significant deviation from the expected, right? Either positively or negatively. And you'd hope that would be the positive one.
So you're basically saying that if the core looks like that painting right behind you, you're not going to do an MRE.
That's an interesting way to describe it, but yeah, If we're hitting tons of VG where we're not expecting it, absolutely, that's definitely something that we'll think about. And again, but I think, you know, back to my original point on whether doing a resource or not doing a resource, let's say that we hit that and the market doesn't necessarily adjust our cost of capital to do more exploration, right? Then I think it makes sense to continue to pursue a resource, put something on, I guess, you know, put points on the board and see if we can get value for that.
Right. And all this revolves around, again, that potentially that second financing that you're going to be doing this year to continue exploration. Is that the only way to capitalize the company? Like, could Tiptoe come in and you look for an option deal on it or a sale on it that you use that project to finance exploration on Gold Chain?
Yeah, so we've been, you know, Tip-Top is that's a good question. You know, Tip-Top is a good project. It has 154 drill holes in it. There's a non-compliant resource there, about 50,000 ounces. It is a 5 square kilometer gold and soil anomaly. There is interest in the project. We haven't been able to crystallize anything yet. I think part of it's been the market. You know, no one's out there starting new gold companies and wants to put it in there. And so we've been, you know, but we continue to feel that interest. And yes, I think it has the potential to be a financing outlet for the company, and we'll continue to pursue those strategic initiatives. I don't know if it funds an entire drill program all on its own, but it certainly could be a piece of the equation. I think that there are, I think, you know, is equity the only way? I don't know. You know, we're talking to other groups, other forms of financing, whether that's via M&A, whether that's via joint venture. They're all dilutive for Gold 79 shareholders. The question of which is the least dilutive and which makes the most sense at which time. And so, you know, even you know, a royalty financing is dilutive, right? Maybe it's less dilutive than an equity financing at that moment, but that is a 2% NSR that you can never sell again, and you get at that moment. So I think that we're trying to be pragmatic about how we approach things, as far as what we can do and how we spend our money, and then try and advance the project as the market dictates, as I think has kind of been the approach. If our cost of capital is high, we're taking small steps. You know, as an example, this trenching program that we're going to undertake, it's a $100,000 effort, right? That's not a big. It's going to give us a lot of data. It's going to get us a lot of information, but it's $100,000 on its own. And I think that's, you know, this is a low cost way. You get 1,000 meters of not drilling, but drill-like data that we're going to report to the market. It'd be a way for us to actually spend a lot of time understanding the high grade zone. It is technically valuable, but I think it's also market valuable as well. And I think those, you know, that will start to highlight where we're at as in the market, right? We are seeing drill holes rewarded again, which we've seen over the last little while. And so I think that's as opposed to last year when we drilled 9 meters at 51 and the market didn't care. So I think that's positive for us as well, a positive for the sector as well, and then potentially for our cost of capital if we can get going. You know, if we look back, I was a research analyst in 2016, 2017. The last time there was 2015, 2016, 2017, last time there was a bit of a big move in the sector. And one of the things that became a catalyst for companies was financing, which sounds like a counterintuitive in and of itself, but it was because those companies all of a sudden had the ability to generate catalysts, right? If you're an exploration stage or a pre-revenue company, the thing that moves your share price is activity and events. And unless you have the ability to deliver those, unless you have the ability to deliver those catalysts, then you do not have, then why would the market care, right? You're not gonna put out new drill holes. You're not gonna put out sampling results. You're not gonna, you know, share prices. Why would your share price appreciate? There are hundreds of, you know, if I wanted something to appreciate, if I want to invest in something that's going to appreciate solely based on the gold price, then I wouldn't buy Gold 79, right? Now, with the tailwind of the gold price at our back and the fact that we'll be able to be out there and deliver some results and move the project ahead, and de-risk the project, I expect that I expect that we should get rewarded for that in the market, and the stock should appreciate on that basis. So that's good, kind of where we're at.
Keeping costs low is one way to do it and get through that as well, so that you can afford to basically have more potentially market moving news releases out there. And your corporate expenses stayed remarkably low in the previous period due to everything that was going down, of course. I said it was about $35,000 or something among those lines. Is this where you want to keep it? I mean, 35 rands a month, is that unattainably low, or is that where you want to keep it moving forward as well?
That's pretty low. I think, we made a decision in 2022 when the market was already in tough shape. Both myself and we lowered our corporate overhead. I took a pay cut, and so did our chairman, our executive chairman, a substantial pay cut. And that was specifically because we knew that we didn't know where the next dollars were, and us taking it out of the company was not necessarily the way to go. Additionally, we because of the timing of payments, we'll often go without for periods of time. I think that, can we keep it here? I think, if we're, moving small financings to a program, yeah, we'll keep it here because we want to get as much money in the ground. I think if the market turns and we have and we're able to raise meaningful amounts of money to advance the project, I think that probably changes, simply because it's appropriate. But I think in the interim where we are right now, I don't see that changing.
How have you been paying your own bills in the meantime, though? I mean, did you have another job, or are you sitting in other boards, or what's the deal here?
I am, how I pay my own bills. I do have another job. I'm executive chairman of a company called Olive Resource Capital, which is an investor in the space. I am compensated modestly there. I have also know that I run a junior mining company, and that periods of not getting paid are entirely likely or possible. And so I've built my life around that, the ability to withstand that as well.
That was just a nice way of me asking whether you're a CEO of other companies. I know you're not, but I always like pushing people that way to see how they respond. But to go back to the corporate spend, and I'll let you go because I know you told me you have to go to the top of the hour. But what's the marketing plan, though? I mean, I think most people either don't know about Gold 79 or they've forgotten about it over what's been happening over the last couple of years. How do you change that?
Well, I think there's twofold. One of the things that I personally struggle with is that I struggle with marketing when there's nothing to talk about. And we've gone through a period of very limited news flow, simply because we haven't had the money to generate news flow. I think as that changes, we'll be more active. I think there's twofold. I think both digitally and then out, being at the right conferences to meet investors. And I think those are the key elements to expand our market awareness.
So, but is there a budget in place and right now a plan, or is it sort of a figure it out as you go, as you see those results that you've been talking to me about?
I think that the budget generally, I think that marketing should be about 10% of your budget, roughly speaking. So if you think about $1 million to $1.5 million raise, that would be in that range. I think you could spend, if you have more money, you could probably spend more, but there's also a limit to how much you can spend. And so we are going to spend some money on marketing. I know that, as in one of my past lives, I sold marketing services. I know how important it is. If no one knows you exist, it doesn't matter. And so that's going to be something that comes out of this raise. And I think how much work we're planning will then dovetail into that as well.
All right, there, Gaurav. I think I've been through most of these questions. It seems like we're going to have a lot to talk about over the next couple of months as well. So hopefully get you to come back on at some point. But yeah, I think that's going to be it. What am I forgetting to ask you, though? What did you come here hoping to talk about, but I'm failing to bring up?
No, I think this was a very thorough interview. You covered a lot of the basis about Gold 79, and we're going to keep And I look forward to coming back and speaking to you about it again as we move the thing forward.